All right, everybody. Welcome to the session here today. My name's Rodrigo. We're going to be here with Chief Market Strategist Matt Maley from Miller Tabak. A lot of you guys already know him from the Stock Picks Inner Circle chat room, where he's live trading all day and all that stuff. Or you see him on an interview on Bloomberg or CNBC. He's all around the place. I want to give a couple shout outs here to a couple folks on the Zoom chat. Kayla Jennings, what's going on? Jerry, Pierre, Manju. We got Mark in the house. What's going on? Mohammed, Nicholas, Terry, Tracy, Alonzo. Good to see you guys. Go ahead in the chat. Let me know when you guys are ready to start on the Zoom chat and on the YouTube side as well. I see we got Honey Horse. What's going on, man? MH Peace. Yes, guys. So we're going to be pretty much going down a lot of stuff here with Matt Maley, a lot of topics. Make sure that you're taking notes, keeping up to date, because there's a lot of things that happened during the weekend and that has been accumulating at this point, right? And Matt Maley's going to break down a couple of those things, right? Strategies, trade ideas, buys, sells, option strategies that we're doing. And we're going to show you how Matt is doing that every day in the chat room, Monday to Friday. So we have Marvin. Marvin Jones is ready. Sandra Pisco, Mary. All right. It seems like we got everybody good to go. Let's go. Let's bring ahead Chief Market Strategist Matt Maley. Let's go ahead and bring him in here.
There we go. You hear me okay?
Yeah, all good there, Matt. How are you doing?
I'm doing well, Rodrigo. It was a tough week in the marketplace last week, but we had a very good one in our chat room, making some real nice profits and several different big trades that worked out where we made several 100% on our trades, and then we had a couple others that were merely made 50 or 60 or 70% of money, which was but either way, it was a really great week, and the volatility in the marketplace has not subsided at all. I don't think it's going to subside. I mean, could we get could we get a week or two here or there over time that calm down? Sure. But this is an incredible year. It has been a very volatile year all year. It's going to continue to be that way. And the way things are breaking, much as I thought they would, it's going to continue to create unbelievable opportunities on both sides of the marketplace. So, in other words, when I say both sides, I mean on the buy side and the sell side. Right. And the greatest thing is that we have the tools to take advantage of those much more than we did in years past.
Right. And I mean, you do have a certain strategy when you're trading options. And honestly, like volatility is what's dominating the markets these days, right? We're going to see, and we'll talk about this, as we get into the conversation. There's a lot to unwrap, but, a lot of things are going to start getting shaky in Wall Street with some funds, right? And what's happening. So, at this point, you have to be trading around this volatility. That's what we focus on here, right?
Yeah. I mean, everybody's got, a certain amount of money that they have in a certain bucket, which is long-term investing. And that's great. And you make long-term decisions where you're thinking 3, 4, 5 years out, or even 10 or 20 years out. And that's, of course, always important. But in today's market, if you have the inclination and you have the time and the interest of doing it, you can also have a bucket of money where you can be more active in the trading. And as I said, we have the tools now that we didn't have in years past to take advantage of shorter term moves where you're trading more actively. Sometimes it's during the day or over several days, and we can make the money in both directions. And what we saw last week, I thought, was incredibly, really important to what we're going to see several times during this year. It really happened in the crypto market, where we had margin calls and forced selling caused a big draft in the market. We were able to capture that and some puts or some negative bets. And then at the very end of the week, when I saw a turn of the market to the upside, we were able to close out those negative bets, those bearish bets, with really nice profits, and then turn around and make some really big profits. 500% on one instance, 600% in another one on the bullish side, and literally just in between just Thursday and Friday. These are the type we don't going to have to see those every single day, but we're going to see a lot more of them, because when you have the declines we've seen in the marketplace, the entire marketplace, and I'm not just talking about stock market, corporate bond market, high yield bond market, treasury market, emerging markets, whatever it happens to be, and of course the crypto market last week, these cause these disruptions that for those who are nimble and have the time and inclination to to trade actively can really take advantage and really maximize those returns in that bucket where you're that's more short-term oriented.
Right. And that's the thing, because there's a lot of volatility right now in so many different markets because of so many different reasons right now. And the most important thing right now to know is that regardless of what happens, right, the market can go up or it can tank, 20%, but we're going to be profiting either way, right? Because you can do that with the options and that strategy. So that's good to know that, right? And I even heard there's Abdel in the chat, Luna coin. So there's it looks like there's some other coins there that have gone from like $80 to zero, or some sort of crazy wild things out there. And so there's definitely a lot of volatility, like you say there, Matt. Do
Yeah.
you want? Mhm.
Yeah, it's just, and the thing is, and the thing is, the tools are there, and we've talked about this in the past, but in the old days, and it wasn't that long ago, where if you wanted to make a negative or any kind of bet in the options market, if you really thought if on Friday or on Friday morning or Thursday, late Thursday, like we did, that we really liked Apple Computer and we thought it was oversold, it's a great opportunity to buy some call options. That's great, but you would have had to buy the June calls. Okay, that expired on like the 20th of June, somewhere in that range. That means you would have had 6 weeks of time premium to pay. That would have been very expensive to buy those options. Instead, we only had 2 days of, we said nowadays we have weekly options and not just Apple Computer. All the big cap names and many of the medium-sized names were weekly options. You don't have to pay that time premium to go out to it. If you think about it, even if you're not an experienced options trader, if somebody sells you an option to buy a stock, obviously they're taking more risk if they're giving you that the time frame is 6 months from now or 6 weeks from now than it is if they're just giving it over the next few days. There's less risk involved, so it's cheaper for you to buy that option. And it's the same thing for betting on the downside. Again, in the old days, there were very few things you could do to the downside. You could buy put options, but again, the same thing that we just talked about. You had to go out several months or at least several weeks, or you could go short. That was it. Nowadays, and going short can be very, very dangerous because you can lose more than 100%, right? If you buy a stock at $20 and it goes to zero, you lose 100% of your money. You short a stock at 20 and it goes to 50, you lose more than 100%. They're going to actually ask you for more money because you could. So that's very, very dangerous. But in the options market, you can play. And also, of course, not just in the options market where we have, again, weekly options on all these different stocks. We have 3 times a week options on the indexes where we've made some real nice money there, especially on the QQQ options, which is the NASDAQ options. But also you have you have ETFs that are, they can be on specific groups or the entire market. They have leveraged ETFs where, geez, I don't want to play in the options market now, but I think the market's going to rally 5% over the next week or two. Great, go into the 3 times leveraged ETF, and you can, instead of making 5%, you make 15% in just a matter of several days. Again, there's none of this is there's no guarantees in life. That's for darn sure. And there are trades where we lose money. There's no question. But we have the tools to take advantage of it in both directions now. This was something that only institutions had until the last few years. And these options, I mean, to buy any, when you buy a weekly put option or a weekly call option in Apple Computer or any of the options in the S&P 500, the NASDAQ, or the Russell 2000, they are so liquid. You have any problem of getting in and out of your trades. There's no problem with that at all. And therefore, we have the tools now that again, only institutions had in years past. And so, that's really what makes me so excited about, this, I was excited about it at the beginning of the year on what we could do. And I've been even more excited because we have been able to do it, made some unbelievable profits this year. And I think we'll continue to be able to do it in the weeks and months ahead.
Right, and just so everybody knows where we do this, right? So basically, this is I'm showing them the live trading room, right? You have Matt's imported messages, and that's where you're posting your trades, entries, market commentary. More importantly, right? There's a lot of things that we're going to unwrap and everything, but you pretty much do all of that as well within your trades, right? Taking advantage of the volatility, and then there's a chat room where everybody else kind of communicates, right?
Right. We have a chat room and we're talking all the time. It's become a great team. I like to look at it as a team effort. And because a lot of the ideas come from other people, not just me. But when I do a trade, the thing is, we're talking all day long from, we start before the market opens and after the market opens. So you have a scrolling thing going along. And then if I decide to do a trade, or if I think somebody else should do a trade, that, sometimes say, hey, I don't like this trade, but other people are talking about it. I think it's one you want to look at. Well, how are you going to find that out if you're not, if you have to scroll up and down? You can just go to where it says, again, Matt's important messages. You can just go to that page. You can, you off got lunch. You're doing your own regular job. You come back and you look at those messages and say, okay, this is what I've missed. This is what I can do. And then you can come into the chat room and say, hey, Matt, you suggested this an hour ago. Do you still think it's a good idea? And that type of thing. And so it's great to have these two different pages so people don't, if they're not in the chat room all day long watching it, they can still go back and see what some of the ideas that we're coming up with. And again, I don't just put the trades in there. Sometimes I just put market commentary that I want people to really focus on, or something, maybe a trade that I'm contemplating, towards the end of the day. It's like, hey, the market's really rallying. It's getting way far ahead of itself, but I'm going to wait until the very end of the day and then buy some put options on maybe some indexes so that we can take advantage of the next day. So I'll set it up that way. But again, with that page, that Matt important messages page, that's something we'll post 6, 7, 10 at the most, where posts on the day. Whereas the chat room has just got hundreds of posts every day from a lot of different people.
Right. That's very good that you have it all organized. And really, that's how it has to be, I feel, when it comes to volatility, because these option trades that you're doing, they could go up really quickly, and you do want to have an exact timestamp, right, of when you're buying, and you're posting clear entries and exits, no sort of gray zone per se, or like maybe here. So this is what I'm buying, this is what I'm selling. So that's really that's what I like the most out of it. It's so easy to follow for new people, even that are getting in the market and might have been getting squished, after trying to buy the dip. After you hear that everywhere, but at this point, now that you are showing them how to do it, so simple, buy a call or buy this put, it just becomes a little bit easier to deal with this whole market correction, crash, whatever you want to call it, and what is coming ahead, right?
Yeah, I mean, we go, when I put a trade idea in there, I give it very, very simply. It's like, hey, I'm going in, I'm going to buy a specific, the first thing I say is the asset, the underlying asset, Apple Computer, AAPL, or the QQQ, which is the NASDAQ 100 ETF. I'm going to buy the Apple Computer, May 13th, $143 call, which is what we bought, and put that right in there, the exact time. So if somebody's off, not watching, they're off, they're off the computer for a while. They come back in, they can say, hey, Matt, I saw you put this in there half an hour ago. Do you still like the idea? And maybe the thing had already moved, but in most cases, half an hour later, I'll still like that idea. But you can follow it, but exactly. And then I tell you what, believe me, there's a lot of general comments I still make in there. Just talk about, look at this, look at that. But most people, they just kind of say, hey, I think the market's bearish. I think it's going down. I tell you exactly where we should enter the trade and exactly where you should enter it. I never do a trade. If I do a trade, about it. I don't do any trading that you won't know about it when I do it, not 10 minutes after I do it. And a lot of times I say, hey, I'm thinking about doing this. I will say before I do it, but I won't, obviously I won't. If I tell you I'm doing it, I'm doing it. I won't say I'm going to do it and then wait an hour. If I've done it, I'm saying, hey, I'm going to do this trade, and then I do it. Sometimes I will say, I'm thinking about doing this at some point today, but if I say I've done it, and when it's time to get out, I tell you it's time to get out. And sometimes I'll say, just sell half here. We've doubled our money. Let's sell half and let's see if they can run a little bit more. But you have a specific time frames, and that again, there are other ideas, and that doesn't mean people should only do those trades. As I mentioned just a few minutes ago, we have many people who come in, and I've missed some good trades where people come in and said, hey, Matt, a couple of guys have been in the chat room are thinking about doing this, and I'll say, that looks like a good idea to me. I'm not going to do it because I don't have as much confidence as you do, but go ahead. Well, sure enough, those people, I wish I had done those trades because people have done very, very well. I kind of gave them my blessing, but I still missed the trade. And so there's a lot of different ideas out there. People can obviously still do quite often trade things that I may not like or are not going to trade yet. But then if you've done a trade, frequently people who do trades have nothing to do with what I've said, and they'll come back in and say, hey, I've made a nice profit in this. Do you think I should I sell it now and take the profit? Should I let it ride? Oh, geez, I did this trade. It's not working out. Should I, just take my losses now? And we're talking about this kind of stuff all the time. But the point of the big thing is that I try to be very specific and not just in general. Again, there's nothing wrong with this.
Right. So
we're very, very general. I try to be more specific. I think that's just more helpful.
right. And all the trades do come with a lot of education because you explain what's happening on the markets and all that stuff. So let's go ahead and see a couple of the most recent trades of how you take advantage of the volatility in the markets. And as you go ahead, you can kind of touch a little bit on it before we do get a little bit deeper.
There we go.
Yeah. And yeah, so we're going to be up here for a couple hours, guys. So, we're going to be going here through a lot of things. So just, be patient with everything here because we do have a lot that we do have to go over here, right?
Right.
All right.
Okay.
All right. You're showing your screen there, Matt?
Yeah. Can you see it?
Yeah.
It hasn't come up yet, but it'll be up in a second. Hold on. I just running a little slow here, but I'm really sure why my computer's so slow, but should be up. Let me get rid of that. Oops, no, I'm going to get rid of that. Maybe because I got too many things up here. Let me just keep that up. There we go. Okay. Yeah, I had too many things running on my computer. So let's pull this up. And we're just going to talk about the trades we did just this week. I've got plenty of trades from the last couple of weeks. But let's just go here again. This is just filing. Here we go. Here are my trades. And don't worry, I'll be able to blow it up so you can see it much better than you can now. Hold on. It'll only take a second, two more. But, last week, of course, was a big week in the stock market. Let's see here. Okay, T2Q. That's, I think, the one I want to have. Wait a second. Okay, oops. Here we go. Okay, good. We'll start with this. Okay, now, make sure, now I'm going to blow it up so you can see it better. Okay, great. Here we go. So SQQ. Now, these are call options, but they're actually a negative bet because the SQQQ is a negative, it is an inverse ETF on the NASDAQ 100. And so we had actually bought and sold these a couple of times this week. And we had owned them for a while and made some very nice profits. But literally, as we came into the end of the week, I'll show you other trades that we've done literally in the last couple of weeks, not 6 months ago. We made some great trades 6 months ago. But this is something we do on a pretty regular basis. It's been working quite well. But here we are, the SQQQs. This came on, I'm sorry, this was last week. But the previous week, okay, we came in and we bought them, the SQQQ calls, within literally a couple of days. You can see, well, people we bought them here at the end, I'm sorry, on the 6th. People could made as much as some people sold the things up here. We did sell some things here over 100%. The worst we did on them was a 78% gain. But I really wanted to talk about last week. I'm sure I meant to do on this. Okay, this is what happened last week. This was Friday, the big rally day, right? This was Thursday. This is the SQ. These are the options here. This was on Wednesday. Wednesday was the big when we had the big sell-off, right? And what happened? And it was that we had a big problem in the crypto market, and there was forced selling took place. We heard about with these Luna, and some of these ones went tenant, excuse me, that where the crypto markets just got crushed. And what happens? They got margin calls, and a lot of these cryptocurrencies, some of these stable coins and such, they just did not have the liquidity people needed to meet their margin calls. In other words, they couldn't sell enough Bitcoin to meet their margin call. They couldn't sell enough Ethereum or Stableford or whatever these certain coins might have been. So they had to turn to the stock market, and they sold what they own. Of course, if you're buying cryptos, you don't own General Motors, you own Applesoft and Applesoft. Apple Computer, Microsoft, etc., and that just crushed the markets. Well, so we came in and late in the day on Wednesday, we bought some of these calls, okay, and we see out here at 2 o'clock, the market rally. We made 100. The market opened the next day with a big discount, and we made 116%. 116% in less than a day. So basically, we bought them at 2:30, and at 9:30 the next morning, we sold them at a very nice profit. Okay, hold on here a second. Then the next day, okay, so now we're on the 12th, right? And the market's getting crushed. And we made some real nice money on the negative side. But the market was getting oversold. Everybody on CNBC and Bloomberg PV were saying this market's going lower. We'll get a bounce at some point, but this is not good. And the put call ratio was going through the ceiling. And I had people in the chat room saying, boy, this looks really ugly. And I said, no, this is a washout move. It's not the washout move, but it's a washout move. I'm going to buy the TQQQ calls. Okay. These are again, I came in and I said, we're going to buy the TQQQ, the exact date, May 13th, the exact strike price, the $29, and the calls, whether it was a call or put. We bought these at 3 o'clock. And I said to myself, why wouldn't you wait right till the close? And I'm like, this thing is washing out. And there were some other reasons I thought that they'd try to rally the market at the end of the day, which we talked about in the chat room. And sure enough, the market opened big. And we came in and people were saying, should I take my profit? We're up over 100%. We doubled our money. I said, no, we're going to hold on. I think this thing's got further to go. And sure enough, we finally took profits, at about 10:30 in the morning. Okay, so we bought them at 3 o'clock on Thursday. By 10:30 on Friday, we made over 600%. Now, some people sold them a little bit earlier. Some people didn't buy the QQQs until a little bit later. And I can't blame them. This was a really, really nervous time frame. But I just used my experience of 40 years on Wall Street, trading on Wall Street, and at some of the most important trading firms there were in the business, Solomon Brothers and Merrill Lynch. I had a great background. And so some people bought them a little bit later. And one person on the chat room said, hey, I made 550%. I'm taking my profits. I happened to hold a little bit longer and made 600%. Now, other people held even longer and did even better. But then later in the day, the market sold off. I'm sorry, the market pulled back and these earnings came down. But that's what we made. We made one time. We went from a nice, whoops. And then, so we made a nice profit over 100%, betting the market would go down. Later that day, we switched it and bet the market would go up. We made 600% on the TQQ calls. And at the same time, right, Apple computers, see here, just about 3 o'clock, just after 3 o'clock, you can't do two trades simultaneously. I didn't do it. And we bought the Apple computer, May 13th, $143 calls. Again, by 11 o'clock the next day, we had made 400% on the return, and we sold those options. So we made money on both the downside when the market got hit, and we made money on the upside. Now, other people held on to even longer, and they made even more money, made 500 or 600%.
Right.
So this is this is the type of, we can take advantage of these things. These weekly calls and puts are so fabulous to take advantage of these kind of follow the moves.
Now, more importantly here, keep in mind that not only are you, posting trades and all that stuff and entries, and people can, profit from the stuff, but also they learn and understand in the chat room things about what's happening with the Fed, with inflation, because, you go on interviews on CNBC and Bloomberg all the time. They ask you what's going on. For those that don't know, Matt Maley has 40 years in Wall Street, all the way from Solomon Brothers, which is one of the biggest trading desks for decades, and then Merrill Lynch. And he's a chief market strategist at Miller Tabak. So global, looking at overall global economies, right? So there's a lot of things going on, right, that we will cover here as we go. But Matt, you also do a lot of trading around the Fed, and there's a lot of volatility. Again, guys, if you're not used to trading around volatility, it's okay, but there are ways to do it, and that's what Matt is a specialist at. I can tell you, being here about a year and a half, the entire volatility the market has seen, Matt has been accurately predicting every single correction and trading it, and telling all his members to put cash aside because he expects something big to happen in the market. And that is what we're going to try to go over here as well. We're going to tell you what's going on in the market, but also if you do want to trade it, if you do want to profit from it, join the chat room. That's what I'm going to say, right? So let's go, Matt.
Right, and this is one of the reasons why things are going to continue to be volatile and therefore profitable for us as traders. Look at this. This is the S&P 500. Now this chart, I do admit, it's about a month old. This margin debt has changed. It is no longer as high, but that's the whole point. We see what this is. The S&P 500 here obviously has fallen a big time since then, but at the high, you can see how the stock market was high. The red line is margin debt. That shows how much leverage there is in the business, and it is since then it has fallen quite a bit. but it's still above where it was in 2007. I mean, well above it. Okay, that's why it's so important. I mean, 2022 is going to be the year of forced selling. We are going to see. We saw it this past week in the cryptocurrency market. We may see it again in the cryptocurrency market at some point. But again, we've had so many different markets that have fallen so much that you know that there are leverage. There's so much leverage in the system that these leveraged investors are going to be forced to sell. Again, when you get a margin call, it doesn't matter what you think of that stock. Okay, it doesn't matter what you think of that asset. If you own, whether it be a high yield bond or a cryptocurrency, if you get a margin call, you've got to sell to meet that margin. You either got to pull the money from somewhere else, or you've got to sell the stock or sell the asset, whatever it happens to be. This is exactly what happened in 2008. I'm not saying we're going to get. I'm sorry. This is exactly what happened in 2000 to 2003. There was these waves of forced selling. I think that's a better analogy than it is for 2008. 2008, the banking system was on the brink. We don't have that situation, at least not yet. And so we have a situation where you're going to get these leverage buyers, these leverage holders to unwind debt. The next one's going to be at some point, some hedge fund is going to blow up because they just have too much money. If they have to liquidate, they will have to sell. Maybe it's going to be a big mortgage, a big bond hedge fund where they've got to liquidate, like long-term capital management had to do back in the late 1990s. These things are going to come in waves. We want to be there. We saw a big wave last week. We took advantage of it on the way down. We took advantage of after the forced selling was over. It leaves a vacuum. The market bounced back, and we profited very, very well. It was a great week for us last week. We're going to have more weeks like that in the future, and we could even have one as early as next week with the things that are going on. But it's very, very important to show just how much. See, look at that leverage in 2000. It was more in 2007. Look how much more we had today. Okay, we are in the process with the Fed completely changing, going from the most incredible, massive, big accommodative program ever to going, not stopping it at neutral, to going all the way to tightening, not just raising interest rates, but they're going to start. They haven't even started QT yet. They haven't even started to shrink their balance sheet yet. Once they do that, more leveraged investors are going to have to sell. And that's what's going to create unbelievable trading opportunities for us in the weeks ahead. And it's not just going to be in the stock market. It's going to be in many different markets. We should probably go right ahead and talk about our biggest trade of the year.
Right. So I do want to let the folks know here, right? Matt Maley, by the way, that barber can cut in the YouTube chat. Hey, what's up, Matt and Rod? I'm not home and couldn't get into the private Zoom chat. No worries, bro. But I'm here. I can't say that bad word, but I made a lot of money with the SQQQ and TQQQ and Apple calls from Matt. You rock. So that barber can cut on the YouTube chat is giving you a shout out there, Matt, for those trades, but definitely there. But the other thing, guys, the record here at Benzinga for the biggest trade percentage wise, right? And the prior record was from Matt himself. And we're going to show you that so you can see how the strategy works on volatility. So does not all the volatility about what's happening, we can trade it, right? But the FXI was, some people made about 14,000% on that trade. It was, but go ahead and explain us the volatility, what happened, because this is what you analyze in the markets, right?
Yeah, exactly. I mean, it's funny because when we have volatile markets, it can go, and you can take advantage of these short-term moves when things get to extremes, even if they go against what your longer-term or intermediate-term feeling is. Right now, I am not bullish on China, and I wasn't bullish in the middle of March when we made this call. But again, we're not just looking at U.S. stocks. We're not just looking at the apples of the world. Okay, we're looking at all over the world. We had the FXI, which is the large cap Chinese stocks, and it's the ETF for Chinese large cap stocks. Okay, look how oversold they become. I used technical analysis to go, hey, I don't like this market at all. There's a lot of problems that they're faced with, especially with the renewed lockdowns. But it didn't matter. It's like it becomes so ridiculously oversold. So I use technical analysis right here. This is called the RSI chart, Relative Strength Index. You can see the green line. When it gets below 30, when any asset gets below 30, tells you it's getting oversold. You can see it got oversold there, and it bounced for a while. Okay, that's actually a fairly, it doesn't seem like a big move, but it is a big move. Here it got oversold here, then it saw a bounce. Got oversold here, saw a bounce. Look how incredibly more oversold it got here. Okay, you see again, it gets below that the green line. They use a green line because that's to say, go ahead. That's that time to think about buying because it's getting oversold. That's, go. And the red line is stop. Don't stop buying. It gets overbought. It gets up near that 70 level. And sure enough, it rolls over. This time, it got so incredibly oversold. I'm like, I don't care how much I don't like the Chinese market on an intermediate and long-term basis. This thing is going to bounce. And so I took that technical analysis. Then I pulled away and said, I also knew from experience that whenever their Chinese stock market gets incredibly oversold, the government comes in and buys the market. And so it's not just going to rally, it's going to rally in a big way. So I came in here and I just looking at and I knew that there was good reasons why I was down. Fundamentally, it was down because the Chinese government had been cracking down on many different industries the entire year of 2021, and because the U.S. was talking about delisting some of these Chinese stocks. So again, the fundamental situation was negative, but I knew that this was already priced in based on the number one, the technical analysis, and number two, that I knew the government would come in and support the market. So I came in and said, okay, let's go in and buy the FXI, March 18th, $30 calls. So we bought these on the 15th, in the last hour of trading of the day. And sure enough, the next day, the government came in and the thing just took off. The market itself rallied. Let's see. Boom. Okay, here's the next day. Okay, boom. 27% rally. Imagine the Dow Jones Industrial Average rallied 27% one day. Well, that's basically what happened to China's market. I knew that was coming. I knew it was going to be big. I wasn't sure it was going to be that big, but I knew it was going to be big. And sure enough, we made, so the next morning, we bought it again here at about 3:30. By 10 o'clock, 10:30 the next day, I said, okay, this thing's up almost 3,000%, not 300%, 3,000%, 2,948. And I said, let's sell half, not all, let's sell half right here. And the reason why I didn't want to sell all of it was because I knew that the Chinese government was going to continue to buy. This was not something that sometimes you just get shorts get squeezed. And as soon as they're done getting squeezed, the thing can roll back over. I knew the government wasn't going to let that happen. So we held on to the end of the day to sell the other half, which was basically up 8,000%. And again, in the chat room, I said, let's sell this. But for those who want to take a little more risk, because what I believe the government's going, it may go a little bit higher. And sure enough, there are people who made anywhere from 11,000 to 14,000. I can only show you what I made because it's time stamped where I bought it, and where I sold it. Bought it here up almost 3,000%, up here almost 8,000%. Other people even did better. But these are the types of things that we're looking at. It's not just big, and it's two things here. Number one, we're looking around the globe for anything we can get. It could be in the currency market, it can be in the fixed income market, because we have ETFs in those markets that we can trade. But we don't have to. For so long, so many people said, "Oh, geez, if I can just buy the next big thing that's trading at 80 cents or trading at $1.20, and it's going to go to 10 or it's going to go to 50, I'm going to make." That's fine. But we go into the options market in stocks that are really good companies. We don't have to worry about, the stock may go to 10, but it may go to 0. We don't have to worry about that. You don't have to go these obscure names. But don't get me wrong. We look for them. We've traded and made nice money on some of those smaller names, but you don't have to go to those areas. We're looking at anything you can get, anything where's the volatility next, where we're going to get it. Sometimes we miss out. Sometimes we're a little bit early, so we cut our losses and move on to the next one. Nobody bats 1,000. Anybody who claims they do is lying. I'm absolutely telling you they're lying to you. But we make a lot. The thing is, we bat. We want to be batting. We're batting way over 500, and when we make the bets, we're making big money, which is what we can do in these kind of volatile markets.
Right, and I do want to let everybody know that there is a 7-day money back guarantee on it. Everybody that joins gets a laptop and everything, but more importantly, not every trade, of course, that we get is 14,000, 7,000%. But when it comes to actually getting entries and exits, that's what matters, right? That you get from Matt. But that was one of the reasons why I do like that trade, Matt, is because nobody else was looking at China at the time. No, everybody. I mean, and more recently, right? Let me just add here. I made a pretty good profit there shorting the FXI puts. And I did ask, Matt for, and you could do that in the chat as a member, right? You can ask Matt, hey, what do you think about this? So that's great that you can get that live feedback and all that stuff from Matt. But, anything else here on this trade? Because Nobody else wanted to look at China, and you were looking at so where nobody else was looking, and that's kind of interesting that you find the volatility, you look for it.
Exactly, and it's just it's because I've spent so many years. Again, I spent the first 25 years of my career trading, and I traded. Again, Salomon Brothers in the 70s, 80s, and 90s was the most important trading desk in on Wall Street in all basically all asset classes. And I was obviously on the equity side, and I was covering the trading desk of the biggest accounts in the world, whether it be the biggest mutual funds, the biggest hedge funds. I mean, Fidelity, the biggest mutual fund, BlackRock, the biggest hedge fund. Big insurance companies, big banks, and also some smaller ones that really savvy ones. And so you really learned. I learned what not just what should happen and what should theoretically happen is read the textbook, but what really happens in the marketplace. So I know that even though that a stock or a index like the China stock market looks like it's going to go lower over time, I know that these things are going to can see bounces. And so, and I look at these things over, if you can't just look at the stock market, can't look at Apple Computer just in a narrow thing. You have to look at everything. What are all these different things going to be impacted? So I'm looking at all these different markets all the time anyway. And so even though I tend to be looking at them and say, how is this going to impact the U.S. stock market? Sometimes I say, forget about the U.S. stock market. Let's go to that market and make the trade. I mean, we got something right now that we've been looking at. We're a little early on, but if we get a rally next week, which could very well happen, you're going to see we're going to take advantage of that with buying some calls in individual stocks and also in some of these index options. We're also going to buy some puts on the dollar because the dollar, if people start to feel better about the U.S. market, which I believe will only last for a short time, just like it did in March, it will cause the dollar to come down. People will no longer be a flight to safety. So we'll look for the UUP ETF to buy some options there, some put options. So there's all sorts of different areas that I'm looking at all the time, and then people are giving me ideas on. I mean, we talked about earlier how some other people made trades in different markets that I didn't necessarily take advantage of. I'll pull you here. Look at Advanced Micro Devices. Great company, great leadership, great prospects, but the stock got way ahead of itself. And this is the stock. We're looking at my Bloomberg screen here. Let's just see here. Hold on. I'm going to take away some of these markets. So can be such a you have too many lines, it gets a little confusing. But here when the stock was up in here, and I was saying that, the stock had gotten, look how overbought it got. Remember that RSI that I talked about? The stock, I said, it has to come down. And we made some money there. Earlier in the year, it bounced back and people are saying still, it's like, oh, this stock is the best company. I'm like, that's fine. But, with all the issues that were coming, I mean, I called this correction. Most people on Wall Street, there's some other people, Mike Wilson at Morgan Stanley, he's another one who did. But very few. Most of the people, we're sitting here in February, we're saying, oh, this little bounce here, the sell-off's over. Don't worry, everything's fine. I was saying no. I was worrying about what the Fed was doing. I was worrying about how the war in Ukraine was going to be a much bigger deal than people realized. And this is why we were able to make money on both sides. However, we got into April. See how important this stock was? How the $100 level is such key support. It bounced off it here back in September, bounced off in October of last year, then it bounced off it in January, bounced off it in March, and it got to this level again, and people said, what should we do? And I did not take the bet, even though I made these calls all along. I said, if it breaks below 100, you want to buy put options. And sure enough, people did. People made real nice money. And again, not everyone's making 5,000% or 8,000% or even 500% like we made last week. Some of these are 80%. Some of them are 50%. Some of them are 130%. Those are great returns. I think we'd all admit. And then when the stock got oversold at the very beginning of May, see how it got oversold in here. And I was looking at some other charts, not just the RSI, and we looked to buy some call options. Again, I didn't make the trade, but people in the chat room were talking about, Matt, what do you think here? What do you think? I said, it looks like it's oversold. That's a good play. I'm not going to play it, but go ahead if you think you should. And sure enough, they did. This is one where I missed it on both sides. Okay, I'm not going to make every one, but again, and the same thing. I can't trade. I'm going to trade 20 stocks at a time on short-term trades. But I have my positions. I tell you what they are. I'm certainly encouraged, or I'll say, hey, listen, I don't like this trade here. You should avoid it. But again, some people still do the trade because everybody's their own person, and they should do their own trades. But you can see here how we're using all of these. You can just see it was just such a beautiful chart. It's like this thing 100. If it breaks below 100, it has to drop a lot. And you think, oh my gosh, this is such a great company. The stock dropped 40%. That's what it can happen. It does happen. Great companies. And again, these are the types of things that we're constantly looking at. And so what we're going to be looking at next week in this advanced micro, it got right up to 100. So one of the greatest rules, most important rules, is one of the oldest rules, is that old support becomes new resistance, and new resistance becomes, old resistance becomes a new support. In this case, we had, of course, where advanced micro devices, shoot, my screen's freezing up here, but advanced micro devices, you can see that, let's see if I can get it here. Okay. Well, it's not working, but you can see how the stock got to that $100 here. Perfect. I was able to put it up there. So you can see how it bounced off 100, bounced off 100. Now it's old. See how it's now become new resistance. It got right up to it and pulled back. If it can break above 100, we're going to make a short. We're going to have to do a situation here. When this stock gets back to 100, what's going to happen next? It's either going to take off and break above it, or it's going to get killed. We might even think about doing a straddle option. We don't get too complicated with my trades. It's usually just straight out puts, straight out calls. There are other areas that they want to do that, and there are people in the chat room who do them. I just concentrate on trying to keep it simple, stupid, and it's been working really well. And so that's what we're going to work with. But this is if and when it gets back to 100 again, we're going to have this is what we're going to do is we'll probably buy both a few calls and both a few puts. As soon as it tells us which way it's going to go, well, if it breaks to the upside, we'll sell the puts and add to the calls and let it run, or vice versa. So it's I say a lot of fun because we've been making a lot of money at it, but it's also there's just so many opportunities out there, and again, look at Apple Computer. What happened last week? Again, like I told you, it was what was happening in the cryptocurrencies that knocked down this stock so badly. I'm going to get rid of these moving averages because they're just making things. But look at this. I'm going to tell you, this is what we were looking at on Thursday. Look at that steep sell-off, and let's zoom it in for you here, just to this year. And I'm sitting there going, okay. There's no news out. There's no new news out in Apple Computer. There's no negative news, and yet the stock has fallen 10%. 10% Apple Computer. Okay, this is not some small, peanut company that loses. Stock goes down 25%. Okay, no big deal. Apple Computer 10% in 2 days with no news. I mean, sure, if they said, hey, their iPhone deliveries, they're getting, they're not getting enough components to get their iPhones are going to have the second half are going to be nothing, no negative news at all. It was happening because all of those people who were leveraged in the cryptocurrency markets, they had to turn around. They got the margin calls and they said, we're trying to sell the cryptos. So they're talking to the bankers. We're trying to sell the cryptos. We're trying to meet our margin call. We can't raise enough money. And the banker says, well, you better sell something else because you owe us some money and we have to have it now. So they turned around and they sold what they did own and then what they knew was liquid, what they knew they could sell. And that was called throwing the baby out with the bathwater. This is capitulation. This is a washout move. That's why I went in at 3 o'clock on Thursday and bought call options in that name. And again, it's these are the types of things that 40 would be 40 years in November, 40 years experience brought to me that I saw this situation where we had a forced selling. Something was not happening for any fundamental news. Could Apple Computer go down 10% in 2 days? Of course it could, for fundamental reasons. But you'll know about it, okay? You will know about it. They'll tell you. They'll have because they have to make it public. Geez, their earnings are going to be really bad. Okay, great. I understand. This was a situation where it had nothing. It had to do with cryptocurrency market. The stock, I knew it. Especially, what happened was we saw the cryptocurrency market start to stabilize on Thursday, and I realized that all that forced selling that had taken place on Friday was starting to dissipate, and that's when we made the call. Again, experience brought me into that. Somebody asked me, what made you flip from being bearish all week long and making money on the bearish side to flipping to the positive side. And again, it was more of a gut call, but experience rather than I didn't, a lot of times I like to see this technical analysis and we see certain things taking place that tells us that the market's about to turn. Sometimes you just got to use experience. And I was looking at what was going on in the cryptocurrency market. It told me the forced selling was over and that these other stocks would rally. And that's what we're constantly trying to do in our chat room. And I'm telling you right now, with what's going on, with what we saw last week in the cryptocurrency markets, again, look at this. HYG. This is a high yield.
Really quick here, Matt. I'm getting a lot of emails here from the folks on questions about the live trading room. So really quick, I just want to go over this before we do continue to take the deeper dive here, right on the second leg here of the session. We're going to be here for some time, guys. So yes, Matt Maley does have sessions on Tuesdays. Those sessions are just for the chat members, of course, and there's education going on. So if you guys are new, like what is a call, what is a put, things like that, Matt can go over that sort of stuff in those sessions, and also market updates, that sort of stuff there. So good question there, Phil. Does everybody that joined get a free laptop? Yes, yes, Joanne. Everybody that joins will get a free laptop. That's right. Is this for new traders only? Not really. We do have new traders and advanced traders, so both of them. Let's see, what's the schedule of the live trading room? Good one. That's Monday to Friday, 9 to 5 p.m. So it's trading all day. And as Matt will give you market updates of what's happening and all that, and how to trade it, of course, how to profit on this. Money back guarantee, yes, 7-day money back guarantee for anybody. Price at renewal is the same. So yeah, I think that covers everything that we most of the questions you guys had there. Matt, is there anything you want to add there that maybe I missed out there?
Well, just you highlighted the Zoom call that we do on Tuesdays. It's Tuesdays 11:30 Eastern time, and it's about a half hour or so, sometimes longer. Just talking about what's going on in a more specific way. I'm taking questions. I mean, obviously, people are asking questions in the chat room all the time. And we just talk about, again, I'm definitely going to move back. Because the markets have been so volatile, I've kind of talked mostly about the markets lately, but we're going to move back and spend the first few minutes of each one doing a little bit of tutorials, some basic stuff on what in the marketplace and how these options work, and so that people can get a better idea of what's going on. And we've been able to help in. It was interesting. We had a person last week who said they'd never done an options trade, and they were monitoring things. And they said, I did my first options trade. It was Apple Computer. They did very, very well, obviously, because the stock rallied really nicely. But that's how you do it. Ease your way in. Don't be afraid to say, hey, this is my first trade, or I haven't done many options trades. I'm unsure of this. How do I do it? Myself or many of the people in the chat room are really, really helpful with those things. And also to give you ideas of where you can learn more about the options, where some people have some really good sources that they use. But that Zoom call works out really well. And then I definitely dive into what I'm seeing, what's going on, and why the volatility continues to be what it is, and why I think it will continue to be that way. But that's a good call. And then again, we're in the chat room all week long, but that's a good time. We can go a half hour, 45 minutes sometimes, just talking about the wheel of the day. And the reason why I do it on Tuesdays is that I like to get into the week a little bit, because you never know what's going to happen over the weekend, and then we don't want to do it too late in the week. If you do it too late in the week, maybe a lot of these ideas have already been played out. We want to take advantage of them.
Right. I want to give a quick shout out here to Sandy for joining. Welcome to the Stock Picks Inner Circle chat room, Sandy. Let's go.
Well, thanks for joining, and I think you'll find it very, very helpful. I mean, the whole idea for me is not just to give you some good ideas, but what it's want people to learn about what's going on. I mean, I'll never forget. When I was at one firm, I was at Merrill Lynch, and the person was trading, and somebody asked him, what do you think of the market here? And he said, I don't really care what I think of the market here. I'm just here to trade. Well, that's fine. I mean, he was just there to trade for his customers and do what his customers told him, but he wasn't real good at helping them, advising them which way to go, because he didn't have an opinion on the market. You always need an opinion on the market, whether you act on it or not. But why did you do something? I mean, we're not just making guesses here. It's not, that whole thing where you see, the meme stocks last year, people made a lot of money. Oh, I heard this is the next stock that's going to go up. It's the next stock that's going to be squeezed. It's going to be a short squeeze. Okay. Is that really a good long-term strategy? I mean, I want to teach you why. I mean, this is it's just not just a guess that this might be a meme stock that's going to get squeezed. I'm going to talk about the fundamental factors, the positioning in the stock, the technical analysis of the stock, the sentiment in the group or the market overall. All this things come into play. And so we want to make it really, really, and I think it's been successful, and make it an educational platform as well.
Yeah, and really quick here, Matt, I do want to get into a quick stock here that we'll kind of go over there. It's Vroom, VRM, and that's a company that I believe is a used car like dealership, right? And I mean, of course, feel free to dive into this. You know that the whole rising prices of used vehicles. People getting priced out of new cars, higher gas prices, or maybe a reason for that too. But could there be a trend in the making, right, within this space? Because here's the thing, guys. We do talk about the broader market, we do talk about all that stuff, but keep in mind, like that's okay, right? But we also talk about stocks that could be, small caps, right? That we do trade in the chat room, right? Obviously, CNBC and Bloomberg are not allowed to talk about anything under 5 billion market cap. But hey, here at Benzinga, we do have a lot more flexibility to talk about this stuff, right? So this is a stock that I brought up to Matt's attention. And keep in mind, this is something in the chat room happens every day. You guys can be like, hey, Matt, what do you think about the stock? It's not like, if it's under $5, you can't talk about it. But give us a breakdown on all that stuff there, Matt.
Yeah. Okay. So let's look at this one here. Sorry. Let me just. I just want to zoom in on it. Hold on, just so we can look at it a little bit better there. Okay. So now, so here's the stock. Remember we talked about the RSI, the Relative Strength Index, and see how the stock's gotten very, very oversold a couple of times. Now it's finally bouncing off that. So on a technical basis, this is good. It's finally starting to get some upside momentum. And look at the 50-day moving average. Got up close to it here, failed, close to it here, failed, close to it, failed. Got up right up to it here just a couple of weeks ago, just a week ago, and failed. If it can break above that 50-day moving average, this stock is going to run. Now, well, okay, that's great on the technical side of things. What about the fundamental side? Well, as we've been hearing, that one of the reasons used car market was doing so well early in the year is that people couldn't get new cars, and so they were just they were going off the charts. Well, now the new cars are starting to come in, and that's why these stocks have just gotten crushed. Some of these used car stocks have been crushed. Now, however, now that that they've been already priced in this whole situation, it's now starting to look enticing. You see how the stock is built a bit. I mean, it's, as much as you say, well, geez, it hasn't rallied at all. Well, it hasn't got hit either. It's been trading the sideways range. But we still have these. It's interesting. We talk about the chip situation. I mean, I've actually bought two new cars in the last year. I mean, literally, it was just not buy them. I had 2 cars come off lease, and I got another lease, and then the second car, our other car, we actually bought. But in both cases, they said they only gave us 1 key because they didn't have enough chips to give. You always give you 2 keys. Said, don't worry, we're going to get you that second key, but we don't have enough for that. And in some cases, we would look at the car and said, yeah, this doesn't have the Apple connected thing because they don't have the chip for it. We're just trying to. Well, if you're buying a used car, all that stuff is in it. Okay, so you actually get everything you want, and so again with the pricing, what's going on with the pricing? Obviously, used prices have cut. I mean, even at the beginning of the year, they were off the charts. Now they're starting to come back down again with this whole thing with inflation and stagflation. People are going to have less money to spend, and so it's just on a fundamental side. This is we could see this area heat up again, especially as we move into the second half of the year. So if you get the fundamentals pick up and we see it break its 50-day moving average, this is going to be a great play.
Now, the other thing here that just seems so interesting here to me is that I was going over some of the reports and everything. It looks like they've been, consistently making more and more cash, but somehow this thing got shorted from $75, right? IPO'd like at 45 around there. went to 75 and got shorted all the way to $1, and then from there it had their earnings that came out about last week, and it seems to have shocked everybody. They have some sort of investment meeting on the 26th. They're getting some coverage by some analysts at Wells Fargo and Baird and Stifel. So it just doesn't seem like the analysts would cover penny stocks to me. So it's kind
Right.
of odd to see that.
And look at the short interest, very, very high. This is the short interest, very, very high short interest. So when this stock goes, a lot of people are going to get squeezed, and it's going to run. And so again, and again, we want to combine. This is not. We're not going to buy this because we think it's going to get squeezed. We're going to buy this because it breaks above a key resistance level, and it has a good real fundamental story. Again, we always, if the facts change, we always reserve the right to change our opinion. But this is one where the baby's been thrown out with the bathwater in a major, major way. I mean, Apple Computer is never going to go to $1. Okay, if it does, it's going to be long after all of us are long gone. But stocks like these can also get thrown out, and it creates unbelievable opportunities for people. So this is one. It's not one I'm buying yet, but it's one that we're going to be looking at very closely in the weeks ahead, and the days, and it may even be a few days we might. But in the days and weeks ahead, we'll be looking at this one very, very closely.
Right, and I guess that kind of leads away there. Maybe, there's a lot of things that are happening in the market, of course, there. Red Rum, great pick there for Matt. Yes, I mean, Matt will go over all sorts of trades. It doesn't matter if it's $5, doesn't matter, there's no, and that's the thing, guys. It's called, we go over options and things like that in the live trading room, but that doesn't mean you cannot ask Matt, like, hey, what is a good long-term investment stock that I can have? Keep in mind, Matt is a chief market strategist and has been doing this for 40 years. That's a lot longer than a lot of you guys have even been alive. So keep in mind, use Matt's experience, use everything that he's been learning throughout his 40 years. I think it was 25 years as a trader at Merrill Lynch and Salomon Brothers, and then 15 years as an analyst at Miller Tabak. That's right?
Right, as the strategist, right.
Strategist, right.
And even during those 15 years, I was still trading quite a bit. Not just, but I was still talking to a lot of different customers. Again, major customers, trading desks. So it was I was still involved in there. But in the last few years, it's solely in a strategy. But
Right.
again, and then I trade for myself as well. So it's just really, and when this thing, this possibility came up, and I really saw how I really felt the volatility was going to pick up when the Fed had to change their policy. It's going to present some great opportunities. And here, just to what you were asking about in the chat room here, people were talking about Devon. I mean, this is Devon Energy. Let me just take a couple things off here. But somebody came and said, what do you like longer term here? And I had already bought Devon Energy back in 2020, or that was one of my picks in the long term Benzinga stock picks letter, where I picked Devon Energy, and it's up 700%. Well, people were asking about it here, and I said, look at this stock. I mean, it got back down to its 100-day moving average, and I knew that was key support for the stock. I love energy, and I've loved energy for over 2 years now. And I said, this is a stock you got to buy. It had 8% yield at the time. Well, I think it's more than that. I think it was more like 10% yield at the time. Right now, it still has a 7% yield. But look at how much this stock has rallied. Basically, from 40, it's up 50% just since December. Okay, and this is what I'm going to be looking at this stock. We are going to be looking at this stock for see here, bang. This is when I talked about it. And here, sure enough. Whoop, I'm sorry. What did I say? 95%. There you go. I do my math. Oh, yeah, I used 40 and 60. What was I using? But anyway, so we're up 95%. You've almost doubled your money. So those, I was like, hey, yeah, you can buy this stock on the options, but boy, like the stock. Now, I'm telling you right now, if we get another pullback in oil, which could happen, if we get a ceasefire in Ukraine, oil is going to come back down, but it shouldn't come back down, but it is. The reason why it shouldn't come back down is that even a ceasefire is not going to cause the sanctions to be removed. They're going to stay in place, and therefore oil prices are going to remain elevated. They won't, maybe they're not as elevated, but they're going to remain elevated. And if this stock comes back down to its 100-day moving average, we're going to buy it back up the truck, because every time it did, at calls and puts and doing options trades. We're looking at swing trades that go for a couple of weeks, and then and short-term trading just for a couple of oops, oopsie, what did I do wrong? Okay, okay, okay. Sorry about that. Okay, good. So I just hit the wrong button there. I apologize. But these are this is what we're looking at now. That's just this is a good time. We've been talking for about an hour now. I just want to go back to this one issue that talk about what's going on in the world, because it's very, very important. Why I think that this volatility is going to continue, and why I think a lot of people, most of the people on Wall Street, have really screwed up and missed the boat here. Everybody's talking about the Fed put, and of course now everybody realizes the Fed put is no longer, it's no longer in existence, or is way out of the money than it used to be. This is something I was saying in the fourth quarter of last year. I was saying, if the Fed is telling us they're going to raise rates, that they're going to tighten, they're going to remove that all that accommodation, the market, they have to be, they're telling us that Fed put is, that safety net is being moved lower. The market cannot stay at that level. And the reason why is that they pushed the stock market well above the fundamental value of the underlying fundamentals. I'd say, so I mean, they were looking at the S&P was trading at 22 times earnings, 3 times sales. The market cap to GDP, all-time high. That 3 times sales, you can fool around with earnings. You can, write-offs and things like that. Sales are sales. That's it. Okay, 3 times. That is the most expensive the market had ever been, ever. Okay, and so I knew the market had to come down because it was pushed artificially up. Okay, they did the right thing back in March of 2020. They came in, the economy had slowed to a global economy, basically shut down. They needed to provide a liquidity into the marketplace so the markets would keep running, and the stock market we knew was too far ahead of itself, but and the economy was way down here. We just had to do something. The Fed had to do something to give the economy the opportunity to play catch up. The problem was that in early 2021, when the economy was no longer, it wasn't completely back, but it was no longer an emergency situation. The emergency level of stimulus stayed there. So the market started to come back, catch up, but it never could because the emergency, and it just kept going. It got further and further away. So even if we don't have a recession, I was saying at the beginning of the year, people, really smart people on Wall Street saying, "Oh, I don't see a recession, so we won't have a deep correction." I was saying it doesn't matter if we have a recession. We don't need a recession. The market has to come down because it is way ahead of the underlying fundamentals. But the real important thing that I'm starting to talk about now is that people forget about the Fed put. We also had the Fed call, the thing that pushed the stock market so much further ahead of the underlying fundamentals. It's important to know that they did that because so many people convinced themselves, it's human nature, convince themselves, I didn't make so much money in 2021 because I'm smart, not because of the Fed. And so they fool themselves into believing that the market's come down this much, therefore it's cheap. It's not, okay? And I hate to say it, but 17 times earnings is not cheap, okay? All this Fed artificial stimulus that they've been injecting into the market on several occasions over the last decade, actually the last 12 years, last dozen years, has made people think that evaluations deserve to be higher than they are. They're not. They're going to have to come back. In 2018, okay, the stock market, the valuation of the stock market fell below 15 times earnings, okay? For us to do that, 15 times earnings, the S&P is going to have to drop down into the low 3,000s, okay? Right now it's at 4,000. I mean, that's another 25%. I don't know that it'll fall that far because I don't, I'm not saying it'll make that far of a dip, but the revaluation is going to take it much lower than, and much lower than people think. And so we are going to see this stair-step decline that's going to take the market down. When the market was up at 3,000, was up at at all-time highs, I was saying it would drop to 3,800, and it almost got there last week. We could see rally. We saw a nice rally, and then go 3,500 is almost that would be a 50% retracement of the entire bull market off of the March 2020 pandemic lows. That is probably as far as we're going to get. But the thing is, people don't understand is that the valuations were too high. Well, guess what? The fundamentals are getting worse. Okay, because of inflation and how that's going to impact the consumer, earnings estimates are going to have to come down. So that means if we're going to drop to 15 or 16 times earnings, if earnings are lower, that means the level of 15 or 16 times earnings is going to be level than what we're looking at right now. I hope that makes sense the way I explained it. It's kind of, but my point is, just last night or over the weekend here, Goldman Sachs has cut their earnings, I'm sorry, their growth estimates again, the global growth estimates or US economic growth estimates again, right? They were looking for almost 5%, over 4%. I think it was 4.8% growth for 2022. All right. 2 months ago, they chopped that in half. Now they just lowered it again over the weekend. They're looking for 2%. They're looking for 1.6% growth for next year. So they see this slowdown getting worse next year, not getting better, getting worse. And yet nobody, the consensus estimates on the S&P 500 are still what they were 6 to 8 months ago in October of last year. If anything, they're slightly higher. How can you have economic growth cut in half and have earnings growth still? It's not going to happen, okay? Earnings estimates are going to come down. That means that the multiples are going to have to, then forget it. That means if you're looking for it to get to 16 times earnings, 16 times earnings is going to be lower than people are thinking it is right now because earnings are going to be lower, okay? Now, the former CEO of Goldman Sachs he was on Face the Nation this morning, and he says the consumers need to start getting ready for a recession. Okay, I've been saying since the beginning of the year the recession is likely because the stock market is so important to the economy. But then after the war in Ukraine started, that's when I knew it was over. Especially when it became a war of attrition. It's a war of attrition. This is going to last a long time. That means food prices are going to remain high and oil prices are going to remain high because the breadbasket of Europe, Ukraine is not going to be able to provide those crops for food. Food prices will remain high, and and Russia is not going to be able to sell their oil on the market. That means oil prices are going to remain high. We are going to see peak inflation soon. That is, I keep hearing that on CNBC. I yell at the TV when I hear that. I'm like, it doesn't matter because the stock market isn't even pricing in 4% inflation. Forget about the 8% inflation or 11% if you look at PPI. Right? It is going to come down. That is going to be helpful, okay? But it's not going to be enough because the bond market is still pricing in like 3% inflation. Okay, when it settles at between 4 and 5%, people are going, oh my gosh, that's still too high. That's stagflation. The reason it's supply-driven inflation that's so important. We haven't had supply-driven inflation in a long time, since the 1970s. That's what happened with the oil embargo, the 1970s. Oil prices went through the roof, and people couldn't afford those price increases. If you have demand-driven inflation, it's okay. People are making more money, they get better jobs, they can afford the higher prices. That's why the Fed always been saying, we want at least 2% inflation. That's good. They're correct. Because it's demand driven. If you have supply driven inflation, then you have stagflation because people aren't making us money. 7 out of the last 8 months, real wages have gone down. And real wages means that real, when they use the word real wages, they're talking about the value of wages versus inflation. So wages are going down versus the level of inflation. So we had the consumer is really, really strong. That's great. Why are they strong? Because they got sick and tired of being cooped up again for another winter, even though it wasn't as bad as the previous winter. All this pent up demand is being spent right now. Once that subsides, people are going to look at it and go, oh my gosh, it's costing me $100 to fill up my gas tank. My grocery bill is way off the table. That 3-day that summer vacation where we're taking, we've already paid for it. We're going to do that. But you know something? We're not taking this. Next year, we're going to have to pull back. That 3-day weekend that we're going to take my wife or husband is now going to, we're canceling that. We're not going to do that because it's just costing us too much money to live every day for our essential foods, with food and energy. Okay. That's going to cause consumer to slow down. I'm telling you, I know there's a lot of people, but just look at the consumer confidence numbers. The consumer confidence numbers haven't been this low. Well, they were this low, obviously in 2020 during the pandemic. But other than that, these are the lows. And consumer confidence, you're looking at expectations. On Friday, University of Michigan consumer confidence number, it's back down near a decade low. If you know, along with the 2020, if people's expectations are really bad, they're not going to spend to discretionary. They're not going to add to discretionary spending. And if you say, well, look at all, the inventories are building up. That's good. That's not good. Okay. People are building up their inventories because they say, I buy things every quarter. Instead of buying stuff from my business every quarter, I'm buying it all now because I know if I wait until the fourth quarter to buy like I usually do, I'm going to be paying a higher price. Warehouses are being filled to the brim because people are already loading up because they're afraid of higher prices. Guess what? When those companies who usually sell in the first quarter, the second quarter, the third quarter, and the fourth quarter, some of the third quarter is going to be going, and they go, hey, Mr. Company, aren't you going to order some more stuff? No, we already have what we need, and our warehouse is full. We bought all that now because we didn't want to buy any more later in the year when after the price went up another 20%. And all of a sudden, these companies are going to go, oh my gosh, you mean all this demand is suddenly disappearing because it's already been spent. It's pent up demand from the consumer, and it's inventory building for inventory building when it's because you expect the consumer to spend a lot more money. That's good. When you're building inventories because you're worried about high prices going higher, that's bad. Credit cards. There was a guy, I couldn't believe it, this guy on CNBC saying the fact that credit card debt is starting to pick up again is really good. I don't know what frickin' planet that guy's from. That's adequate. That's ridiculous. People are running up their credit cards bill because they can't afford to pay off stuff because prices are too high. I'm getting all worked up here, but I'm just telling you, this is a situation where we are going to have to deal with this the rest of this year. And the kind of sell-offs we've seen recently are going to continue. We're going to see some nice rallies along the way. And we took advantage of it last week. We're going to continue it the rest of this year. I'm telling you, the volatility is going to be staying with us. We've been able to, in the chat room, been able to profit from it very, very nicely. And I think we're making people, you can tell I'm really passionate about the markets, but boy, people are really missing what's going on out there. And I think all those who are, just take that extra step are going to be able to have a very, very good year this year. I mean, people are up, I just, my portfolio is up 20%. Most people are down 20, 30, 40%.
And that's the thing, because just like, for example, like, the whole Vroom stock where you have the whole a possible, and I don't know, we've talked about it, but people are talking about semiconductors and supply chains. And then, now you're going to you've been seeing this boom with the used car stuff. And there's so many things out there, Matt, that you can trade with the folks, right? Because a lot of these things have options. Someone is Honey Horsey there in the chat. I believe Matt knows what's up. He was on China when we were called the Spy Bounce. Kind of curious of long picks that are not blue chips. I mean, I'm telling you, Matt, that's what I'm talking about. Matt does have all sorts of picks out there, even though we focus on trading options and things like that. Matt does a lot of things, man. Once you've been doing this for 40 years, I'm telling you, you will know what's going on around there for sure, right, Matt?
Absolutely, and again, I don't pretend to be all my trades work with huge gains. And the thing is, when the market's kind of boring, it's hard. That's when you fall back and make those more. You can still make short-term bets, but it's when people don't understand what's going on, and when you have a lot of people on Wall Street, a lot of it. I'm talking about analysts, and I mean they're in their 30s and they're smart people, but they don't realize that that these big swings can take place because they never experienced it. And I have. I mean, I was in my 5th year of the business, or starting my 6th year when the crash of 1987 took place. And so I've been through that. I went through the banking crisis of the early 90s. I went through the crash, of course, of and the tech bubble bursting, and then of course the great financial crisis, and the European crisis of 2011 and 2012, and the pandemic, and the of course the bear market. I say the almost bear market we had in 2018, etc. I have that experience where most of the people don't. They don't realize that this volatility can hit us, so they don't really know how to play it. Even though they're very smart people, they spend too much time on textbooks rather than on trading desks, learning how things really work.
And that's the thing. There's a lot of these, gurus out there, TikTokers and things like that, just for the follows, right, and all that stuff. But nope, none of them have even lived through none of the things that we're seeing here, right? And let alone traded around them, right?
Exactly. I mean, it's again, we've had some people and we kind of say that there's some people who come on CNBC who've never spent 10 seconds of working on a trading desk. And the things that come out of their mouths are beyond belief. They're living in la la land. And they're saying this is, generational buying opportunity. Every once in a while, I'll go in and say, this might be a buying opportunity. And I think on a short-term basis, it just might be. We might see a rally early. The rally that we took place on Friday might go into early next week. We'll see how that trades in the morning. And we'll be talking about that a lot in the chat room because we want to stay very, very nimble. But generational, what are you out of your mind? Generational buying opportunities happen when the stock market is really, really cheap. It is not even close to being really, really cheap. It's not even fair value yet. Okay, that doesn't mean that we can't have a rally from here, and we can't, but maybe things won't go. The market won't fall as far as I'm thinking. Maybe that will happen the case, but to call it generational buying is just ridiculous. And these, most of these people on Wall Street are paid to be bullish. I mean, I was called by a very, very, very big place once, not that long ago, a couple of years ago, asking me if I would join their strategy team. But they were like, we don't want you to, they said, well, it's not really strategy. Your whole job will be to make sure people, don't sell, hold on to their holdings when the markets go down. I'm like, well, that's not really strategy. I mean, that's literally what they do. There was another one, a guy who's, again, he's on CNBC pretty regularly. And again, I'm on CNBC pretty regularly. There's a lot of good people on there, but some of those people, he was once quoted as saying that it doesn't pay to be bullish. He said it doesn't pay ever to be bearish. He said, for job security, it pays to be bullish all the time, because if you're bullish, nobody cares if you're bullish and wrong. But if you're bearish and wrong, that's a career ender. I was like, well, luckily I work at a place like Miller Tabak that says we just want to know what you think. Or other people are like, don't be bearish. That's what they are paid to be bullish, and they come out and they spew this stuff all the time, and it's not helping investors at all. Now, telling them not to panic, that's a good thing. These other people are they're well intentioned. They really do believe that the markets, can't go back to fair value. They don't understand that the market can swing when a leveraged market gets highly leveraged to one end. When that leverage is unwound, it's going to go from very expensive to very cheap before it stops going down. At least that's what history tells us. But they don't want to believe it because it's in human nature to think otherwise. And I'm just here trying to tell you what I think is really going on. And what more can you want? It's having people tell you not to panic. That's great. And I agree with that. Don't panic. But you can, we're still in a situation now where people should be raising money on rallies. And that's what I was saying through the last 2 weeks of March when the market was rallying, and the people were saying, how could you possibly still be bearish? And I'm like, and I went through the reasons why it was. And of course, they're coming back to me now saying, yeah, you're right. You were absolutely right. And I think if we get a bounce here, I'm not sure that we will, but I think there's a decent chance we will. And what I'm seeing from Bitcoin today, which of course trades all weekend long, it's gotten back to 30,000. Let's look at it right now. It is trading about 30,000. So that gives me an idea that it probably will trade. It will be okay early in the week, but I'm going to be looking to set up for the next decline as we go forward.
And also, I know that we've been covering coin as well with the Bitcoin there, right? So what can you tell us about coin right now, and just that whole you already talked about it, but just a little bit on coin.
Well, this is a scary situation. I mean, they came out. The stock has obviously been absolutely clobbered, and a while ago, just a few months ago, I was thinking, this is actually at the beginning of the year, towards the beginning of the year. I'm going to say back in January, February, saying, they're really pushing hard to move into other areas of trading rather than just the crypto. And remember, Coinbase is not a cryptocurrency; it's a trading vehicle. I mean, it's an exchange. There's another way you could describe it like that. And it's not just cryptocurrencies. However, then they came out and so I was just saying, maybe we should give him a chance here. But as we see more and more, Jim Chanos came out and announced he was shorting the stock, and And so I was like, oh, we got to take a new look at this. Of course, the stock is down 50% since he made that announcement. So he's done extremely well. The stock did see a little bit of a bounce last week. Again, once this forced selling got pushed out of the way. But they came out with their earnings call, and the stock was already really oversold, and it got hit even more. But the CEO started talking about, hey, are we going to have, if we don't think we're going to go bankrupt. Everybody's like, even Jim Cramer on CNBC was like, where did that come from? Nobody asked you if you're going to go back. Why would you even say that word? And then it comes out that they readily admit that if they do declare bankruptcy, the money that people have holding cryptocurrencies, they're just going to take it to pay for their bankruptcy their bankruptcy bailout. I mean, not bailout, their bankruptcy proceedings. That money will disappear. If you have money in there and they go bankrupt, it's gone. It's going to disappear. I'm not saying that's right. I'm just saying that that's what they're saying. I'm like, why are they telling us this if they're not worried about a bank? They must. There's stuff going on out there that's just not good. And I'm not saying people should. If I had money, if I held something at crypto in Coinbase, and the CEO tells us that, starts talking about bankruptcy that nobody else was talking about, and then reminded people that, and then we find out that if they do go into bankruptcy, they'll keep everybody's money. That's not something I want to be invested. That's a scary situation.
Let me ask you, what happens if, let's say, I buy puts on this and they declare bankruptcy? Like, what happens to that?
Yeah, but if you buy puts on this, you're not investing. This is somebody I'm talking about. You will not lose. You will not lose your investment in that. The people who lose their investments are the people who are trading, who bought cryptocurrencies through them, right? But if you buy a option on this company, the options on this trade on the options exchange. I'm not sure which one, but the options exchanges, and they will stand up to those trades. So you don't have to worry about that. And it's the same thing with the stock. If you own the stock, they won't take. It's the people who are buying and selling in their exchanges. Those are the ones who are going to who could possibly lose all of their money.
Right. And there's also this other topic there we haven't covered much, but as far as some supply chain issues, China lockdowns because of the zero COVID policy there, and of course you have some of the biggest ports in the world, some of the biggest cities, manufacturers out there, and even for some companies, U.S. companies that do have their manufacturing there. So what do you see happening there? Again, I told you guys, we have a lot to cover here. There's a lot of topics. You have to be patient with us here. But again, by the end of this whole session, I promise you that you will have a much better understanding, as a lot of you already have been with the session. But what do you think about that, Matt? How does that could impact U.S. markets and everything else?
Yeah, it's going to be interesting to see what happens with that, because people are like, well, the Coinbase is eventually. I'm sorry, the supply chain issue is eventually going to get better. Well, of course, that keeps getting pushed further and further out. The war in Ukraine exacerbates this situation. But obviously, the bigger player, the thing that's really pushing out further, is the situation in China, again, with the renewed lockdowns. And how much is that? Well, people say, well, that's going to be okay because eventually, well, yeah, it should at some point. When, we don't know. But in my mind, it doesn't matter that much. Once the supply chain issues start reopening, the higher oil prices and the higher food prices are going to remain. And that's the big problem. We cannot produce enough oil to make up for what happened with Russia. We cannot produce enough. I mean, if Russia reopens their spigots, I mean, and everything they completely pull out of Ukraine, completely, then oil is not going back to $40. Okay, it's going to $80, and that's that'll cause the stock market to rally, and that'll cause oil prices to oil stocks to come down for a little while, but not for a long while, because they're going to still stabilize, because we have not spent enough money to extract fossil fuels out of the ground. Everybody wants to get, including me, everybody wants to get away from fossil fuels. We will not be able to do that in the next decade. We'll be very unlikely to do it in the next 2 decades. Every expert will tell you that. Everybody, even the people so involved with clean energy will tell you we cannot move completely away from them. And the EIA, IEA, the International Energy Association, they say we're going to be dependent 95% on fossil fuels. The demand for fossil fuels will still be 95% of the pre-pandemic levels at the end of this decade. Okay, we have not been able, because of, going on, and of course when Biden came in, he shut that down. We cannot produce enough energy right now to satisfy the world. Okay, and with Russia, with the sanctions on Russia, that's going to continue. Now people say, well, they have these LNG platforms they're going to bring in, and they're going to be able to supply Russia. That's great, but they're going to have to take that. That LNG stands for liquefied natural gas. They're going to have to take that from somebody else. Okay, they're not going to make a lot more LNG and then give it to Europe. Okay, it's going to be, we can't get it from Russia. We'll have to take it from somebody else. So we're going to have to, so the supply demand issue, even if we can get it into Europe, the global supply demand equation is going to be the same. Okay, so prices are going to stay high. They're going to have to take it from Asia or Africa, or probably not from the US, because we make our own and we'll keep it here. But that's what's going to happen. As I say, don't worry, we'll find a way to get that oil to them. That's great, but they're going to have to take it from somebody else. Okay, right. Therefore the prices are going to remain high. And so the supply chain issue will improve likely at some point this year. So inflation will improve, but it's still going to stabilize at a level that's going to be a big problem.
Right. And now this other stock, really interesting there. And we've been talking about it for a while, trying to figure out like what the hell is going on there, right? Let's pull up PayPal, right? And I think this whole thing is because of the crypto thing. I don't know if because they have a lot of crypto. I don't know if it's related because of also Kathy Wood, high growth. I don't know, but this stock is just, it's tough to look at that chart.
Yeah. And people have been saying all the way down, say, should I buy it? Should I buy it? And I've kind of said, there should be a good opportunity at some point. And, but I said, I'm not ready to buy it yet, thank goodness. And I mean, there's people, again, we had that little rally in March when everything rallied. But this company is just, again, I don't think they're going out of business, but these are the types of stock. I mean, it's kind of funny because if you want to play it as a trade, what I'm going to be looking at, and you say, is it worth the chance? Am I going to try to catch the falling knife in this? I'm just not going to. There are others that I've been able to catch, catch that falling knife and pick a nice level where the stock made an absolute low. But this has not been, well, not one of them because I haven't tried to. So, and I'm not going to try to. If it becomes ridiculously oversold on its RSI chart, I will, or on its Bollinger Bands chart, maybe I'll try to, catch it for a bit of a trade. But what I'm going to do with this one, if things get better, look at this. It's this very simple chart, 50-day moving average. At some point, if it can finally break above its 50-day moving average in a significant way, that's going to be a great entry point. It's like, well, by the time that happens, that 50-day will continue to come down. You may have to buy it at 90. Why not buy it at 78 now? Because I don't know what, it may have to go away. It may be a year before this happens. But look at how the 50-day moving average got slightly above it. Okay, couldn't break above it. Got right to it, couldn't break above it. Got right to it, couldn't break above it. Got right to it, couldn't break above it. Again, right there. Got slightly above it, couldn't really break out. Remember, whenever you, it's very, very important. Whenever you break a resistance level or a support level on the way down, a slight break is not enough to confirm anything. You want a meaningful break, one that holds. Once this thing breaks above, you're gonna make plenty of money. Why take the chance of trying to get the exact bottom? Sometimes you can. This one I'm not going to because it's been going down for too long, and I still don't know. As you had, Rodrigo, you said, well, I think it has to do with crypto. None of us are really sure. You're always worried about a company that's not telling you exactly why they're having problems, and I don't want to say anything disparaging about their management. I mean, it's just saying that they got issues, and it's hard to figure out what they are. So I'm going to let them. With this stock, if and when it breaks that 50-day moving average at some point, that's when you buy it. Because when it does, that's when you know it's the horses behind it, and you're going to be able to make plenty of money on it. Without taking it, it's all risk reward. Everybody is you're trying to maximize that. I want to get the exact absolute low, and I want to get the exact absolute high. That's not good risk management. That's just guessing. And in this situation, I'm going to wait for this one to break above it. Again, if something changes, we get 6 months from now, we get some new news and they come out and it's like, hey, If the facts change, I'll change with it. There may be a very good reason to buy the stock down in here someplace before it breaks above that 50-day moving average. So I'll be looking at that. But right now, that's my standard that I'll be looking at in the weeks and months to come.
And is there anything that you're looking at? We were talking a little bit before where, you've seen this big jump in mortgage payments, right? Where people are kind of getting squeezed on every side right now. Um, what do you think right now about the entire overall real estate and mortgage scenario with costs keep going up? Do you think this could, break something? Where do you think this could go, or what's your view overall?
Well, the big thing is what kind of impact is this going to have on the banks? It's just not. I really don't think this is a situation that we faced in 2008 when the banking system was, really on the brink there. But banks make a lot of money refinancing loans, and nobody's refinancing anymore. Why would you refinance it at a higher interest rate, right? And the other thing is that if interest rates stay high, people who have lower who have these low interest rates in their 30-year mortgages, and that's who they're getting income from these people who are paying their mortgage every month, but at really low interest rates. So obviously that's going to have a negative impact on their net interest margins. Of course, the third thing is that you worry about what about all these people who have their 5-year and 7-year adjustable mortgages. What are they going to do? Because they're going to get some sticker shock when they're suddenly their higher mortgage rates kick in. And the people who I seriously think it depends on the interest rate, but if you have an adjustable rate mortgage, it's going to cost you more to go move to a fixed rate, but at least you'll know what level you've got. And if the interest rates go back down, then you can just refinance. But that's a story for another time. But the one thing I'm going to talk about is housing. I'm not as worried about housing as a lot of people are, because I do know, they're hard assets. What works during inflationary periods are hard assets. That's like commodities, food. That's why Archer Daniels Midland is one of my favorite stocks. There's a food, they make food, and they make food. They make the grains, and they produce a lot of the things that help with food products, and the commodities, housing. Okay, one of the best things to own during the 1970s were houses, and interest rates were in double digits. The mortgage people paying 15%, and yet the house price is still went up. And right now, people are not buying houses 5% down, hoping to flip them. They're buying to go because they want to live in a house, because they know that they're going to be working part-time. They're going to be working part-time at home, and they don't have enough room in their apartment with their family. So they're moving out to the suburbs. People want those homes, and people are saying, I want them because I want a hard asset in these inflationary times. And so I'm not worried about this impact on it as much as some people are. The housing stocks are down quite a bit. I think they're, it's not to a level where I think we should, back up the truck and start buying them. But I think they're overdone. But more importantly, it's still a negative issue because it is going to hurt the consumer. These higher interest rates affect them in many different ways. One of those is their adjustable rate mortgages. People have been so used to refinancing at lower rates and taking that money and spending it. And I was like, I'm not going to be able to do that anymore. They're going to have to live completely off of just what they earn, all right? Or what they can put on their credit card at 18%. That's not good. And so again, this higher interest rates is going to obviously hurt things in a couple of different ways. And at some point, it's going to create a great buying opportunity. And that's why even in your big, your bucket that is not active trading that we deal a lot here in the chat room, that one you still want to be raising. If we bounce in the next couple of weeks like we did in March, I think you should continue to raise some cash, put it on the sidelines, have it ready. Cash is no longer trash. So don't be afraid to do that. But in the trading area, is if you can profit like we've been able to do this year, I think we could continue to be able to do, then you're going to have a lot of money to be able to put in when the whole market does finally flush itself out. And when people are selling because they're throwing in the towel, you're going to be the one buying. And that's usually what the pros do. We want to be able to do what the pros are doing.
Right. And good stuff there, Matt. Now let me ask you about this this overall theme of stock, I don't know if you got a lot of questions on it, but what do you think right now about the meme stocks in general? How do they perform during volatility? Is it something where you see that where nothing makes sense in the markets, whatever doesn't make sense makes sense, but um, started getting a random move there. Why do you think people would move there, or it's just a random bounce in
No,
uh,
it's yeah. I think it's more of a more. I mean, it was a little. These stocks were liquidity plays. Sorry, liquidity plays, and just like cryptocurrencies are. I mean, I'm a long-term bull on Bitcoin and the cryptocurrencies, but it got pushed way too much higher than it would have been if it hadn't been for all this liquidity. The Fed had all this liquidity sitting out, just pushing it into the banks. You know how that? I mean, people understand how that works. What they do with quantitative easing, they go in, they buy all these bonds, and well, how does that work? Well, how does it work? They go in, they have it used to be 39 member banks. I think now it's 22, but those banks, they go in and they call them up and say, we're going to buy your bonds, your treasury bonds, your mortgage-backed securities, and the banks, as members, have to sell them those bonds. They have no choice. They sell the bonds, and the Fed gives them money for it. So what do the banks do? They turn around and they try to loan it out to help the economy. Well, now the economy's got back and humming. They say, well, geez, we're trying to put this into economic use, but you're still getting this emergency level of liquidity here, and the economy no longer needs that as much. So we're going to take all that excess and put it into the markets because we got to do something with this money. Okay, that's what they've been doing. Okay, in 2021, they were just kept more money into the market, more money in the markets, more money in the markets. And now they're taking that away. Okay. So that's why this is such a big deal. And so the Fed has stopped pumping all that money into the marketplace. Not only that, they're going to start selling it. How do you shrink your balance sheet? They're not just going to let them roll off and they're going to actually call up the banks and say, hey, guess what? We're selling you these banks. Now you have to buy it. And the banks, those member banks, are going to have to buy it. So they're going to lose money to give away. That's going to take money. Well, we got to sell some of those assets that we own to enable the Fed to shrink their balance sheet. This is it's pretty simple stuff. People try to make it much more complicated than it is. But now that we have these meme stocks, it's going to be much harder for these guys in the chat rooms to squeeze meme stocks and get too short. I mean, AMC is trying to get in a different business with the miners and stuff like that. That's good, but so they're trying to broaden their horizons. But I don't know if the stock really deserves to be a whole lot more than where it's trading now. I mean, could it go up to 15? Sure. Same thing with GameStop. There are a lot of things going on with cryptocurrencies, which long term could work them very well. But we know how cryptocurrencies are doing right now. So you don't want to be. I mean, meme stocks again. You're just guessing. You're just betting on. This is just playing a squeeze, and it worked out very well last year. But we got another squeeze again in March. Could we get another one here? Sure. And if you want to play that game, go ahead. I'm not going to. But this is just another area where people, the froth has got to come out of the market, and it's going to continue to happen.
Yeah, and I do remember that. I mean, you did trade the Viacom with the puts.
That's exactly.
Which was a meme stock, right, as well.
Yeah, exactly. It's kind of funny it's odd that it became a meme stock, but it did. And the reason for that was that it had a big short interest. And, we didn't have to, oops. Okay, hold on one second. Escape. Okay. Okay, I'm sorry. Just trying to see if I can get this. Here it is. No, sorry. There we go. Okay, let me pull it back up so you can see it better. There we go. And this was it last year. And again, I was just looking at the Viacom. This is the Viacom. They're now Paramount. Remember, they split off with all that stuff just a couple of weeks ago. But Viacom, it's like it had a huge short interest, and so people really squeezed it. This was ridiculous. I'm like, these guys are not gonna. We were in the middle of the pandemic. These guys aren't gonna. They're a TV company. They're a movie making company. I mean, they're not gonna come up with a cure for cancer or the next something to replace the iPhone. This is ridiculous. And look at the RSI. This is a weekly basis. It's RSI. Every time it got really overbought, The stock came down, got overbought, stock came down, got overbought, stock came down. Look how ridiculously overbought it came. I came out and I said, okay, let's buy the put options in Viacom, and we made 5,000%. And there are other people who even made more. So it was again, this is a year ago. So we had last year we had one like that. This year we've had one. We've had, as I've already showed you, we've had quite a few that made in the multiple hundreds of percent moves. 1,000% moves aren't necessarily something that happen every week. But again, this is what worked out really well for us last year. I think these meme stocks, if they see another rise like that, we're going to make another big play on that as well. So
right,
he's always looking for different opportunities. Where can we make them? And people, if you focus, I mean, that's one of the great things. I went through that. If you've ever read the book Liar's Poker about the Salomon Brothers training program, I went through that training program way back when, and it forced me to learn stuff about all the markets. And that's why it helps me look at all different markets and look for opportunities in all different markets. Where a lot of analysts are just only looking at, I'm just looking at the tech stocks, or I'm just looking at this stocks, or I'm just looking at the U.S. market, or I'm just looking at the U.S. stock market, not the high yield or high grade bonds. Again, we don't trade these as the bonds themselves. We use the ETFs, and it makes it, which most of them have very active options, and enable us to really take advantage of it. And like I said, it's worked out so far, and I think it will continue to do so in the months ahead.
yeah, and interesting stuff there. And let's say, for example, for cybersecurity, right? Where do you see that sector going overall with everything that's been happening?
Well, it's got to go higher. I mean, it's got. I mean, the group has got to do well. And like I said, even though I'm worried about the market, there's still going to be pockets that do well. Like I said, I like hard assets. I bought every dip in the energy sectors. Every time it gets dipped, so we can, I'm bullish on the group. I've been bullish on the group since March 2020. Hard assets, commodities like oil, gold's going to be one I really want to look at as well. But crypto, cybersecurity, it's only going to get more important. And I'll tell you, if this war in Ukraine, if for some reason it starts to spread, I mean, this situation with Finland, I mean, we have to look at that. Finland is joining. It looks like it's going to join NATO. If Sweden does the same thing, that's going to get Russia's, their defenses are going to get much higher. Then we have this whole situation with, I mean, I talked about Lloyd Blankfein, who is the former CEO this former CEO of Goldman Sachs. He's still on the board. I think he's the chairman still. But anyway, he's still involved with the company. And again, as I mentioned, today he was warning about a recession. Well, he's also warning about China and Taiwan and this whole thing with semiconductors. I mean, Taiwan Semiconductors, the biggest semiconductor manufacturer in the world. If they start to make a move on Taiwan, boy, we got big issues going on. And cybersecurity is going to be that much more important. So it's not a group that is. So even though I'm bearish on many groups, even most groups, there are certainly some hard assets, cybersecurity, that are going to be are still going to do very, very well going forward. Okay, here. I just want to look at something. What time? It's not quite 6 o'clock. I mean, once we get to 6 o'clock Eastern time, we'll be able to look and see where the futures are trading for tomorrow morning. But it's just looking at Bitcoin. I'm guessing Bitcoin has been a very good indicator of what for risk on, risk off. And even though it got clocked yesterday, it bounced back today. We're back above almost to 31,000. Almost to 31,000. That's a bullish sign. And again, we made some bullish trades last week, closed most of them on Friday. Still have a little bit of ones on both sides. But as the market trades, I think Bitcoin can hold up. We'll see how the futures trade. It could give us some more upside, get a few short squeezes in there. And we want to be able to take advantage of that. And what I'm going to be able to do, what I'm going to be doing, is looking at stocks that have been absolutely killed. Netflix. It's like this company's not going out of business. Yeah, people are like, oh, they're not going to make anywhere near as much money. Fine, but they're not going out of business. Look how oversold the stock was. Ridiculously oversold. It's had a big bounce here. This thing could bounce a lot higher. If next week, we'll be talking about this one in the chat room, I guarantee you. This is what you call the MACD chart. Let's see if it comes up. See, look at this. Okay, now, what is a MACD chart? What the hell is a MACD chart? MACD chart is something that gives you an idea of momentum. Now, most people have heard about death crosses or golden crosses. And this, obviously, the golden cross is bullish, and that's when the 50-day moving average of an asset crosses above the 200-day moving average. That's, and that they're both rising. That's very bullish. This doesn't show you a bottom. It confirms, or starts to confirm that a rally, that a near-term rally is going to turn into something more, not just be a dead cat bounce, as they say. It's going to be something that's going to continue. It can happen for an index, it can happen for an individual stock, for an asset class, etc. We also, and of course, the death cross is the other thing. When the 50-day moving average crosses below the falling 200-day moving average, that's a negative. It means that the markets, it usually happens after a market is rolling over and confirms that a new downtrend is taking place. The MACD charts, that causes, they use the 9-day and 12-day exponential moving averages. Remember, the 9-day crosses above the 12-day, that's bullish. And when it rolls back over and the 9-day crosses below the 12-day, it's bearish. See how it was bearish here, where the 9 days is the white line. See how it crossed below that? Look what happened to the stock. Okay, but look what's happened in the last 2 years. When we've seen, I'm going to get rid of these other lines. Look what's happened with this thing, okay? Here we saw a nice positive cross, okay? That's a very nice percentage gain. It doesn't look like a big gain there, but that's a 25% rally there. Look when it turned a positive cross there, big rally. Positive cross there, big rally. Okay, positive cross here. Okay, it stopped going down for a while. That was good, but right here we're seeing another one. We want to see it a little bit more. Like I said, we can get head fakes, but if this become more pronounced on Monday, tomorrow, this stock's going to rally strongly. Even if you don't like it near term, intermediate term, or long term, this could be a great candidate to be buying call options on the stock. And again, we're looking at stocks that have been beaten up. Peloton, oh my gosh, they have more. I mean, who's had more problems with Peloton, right? But those insiders weren't done by selling their stock, were they? When the stock was at all-time high, the stock was above 100. Okay, but here's another one. See how oversold it had become? We made money in Apple on Friday, but some of these really beaten down stocks are going to be the ones that also do even better in the options market. These are short-term trades we're going to be looking at. I'm going to pull up the MACD chart again, and this one. See that it's trying to make a positive. Let's zoom in on it. It's hard to see it. Let's see how it's trying to. Whoops. Trying to make a positive cross right there. See when it made a positive cross down here, the stock took off. Here, the stock didn't do as much, but we're trying to look at this one. I just think with the stock, again, this will be a very short-term trade. And you think, well, how much can you really make? Are you really going to try to make a bet in Peloton? Well, we'll trade for a couple of days, but these are big, big percentage moves. And these are trades. These are not investments. These are trades. 60%. That chart, 60% in 3 days. How much do you think the options went up that day? Okay, so these are the ones we're going to be looking at, and then we'll look at other ones like Microsoft. We can still make big money in those trades, just like we did. Make 600% in 400% in the Apple options. Now, this is a great. Let's talk about Microsoft here, and this is another one of the reasons why I worry. I've talked. I talk about this in pretty much every webinar, but Mr. Nadella is the CEO. It's a great CEO. He's turned the company around over the last decade, and he deserves all the kudos in the world. It's a great company with great prospects, and he sold his stock right here at Thanksgiving. Here, and then he sold half his personal holdings here, and the other half right in here. Okay, $374 million. $374 million. There's nothing wrong with making a big inside sale like that. But I said at the time, and I was all over this thing, talking about it in the chat room, saying that CEOs don't sell 2/3 of their stock all at once unless they think that stock is going to go down and not get back to that level for a long time, for a couple of years. Now, it doesn't mean that stock's going to go down for a couple of years. They're not going to get back. And, people are like, are you crazy? Are you crazy? Well, guess what? The stock went down 20. And this guy saved $100 million by selling this. Again, he's the reason the stock has done really well. But he realized, my opinion, he saw the stock was overvalued. He saw what the Fed was doing. He realized that the stock market was overpriced. And so he took a big chunk. If he'd sold $20 million worth to buy a house in Hawaii, I wouldn't have thought twice about it. And it goes back to when insiders sell. When we saw IPOs, Goldman Sachs have been private for over 100 years. They went public in 1999 because they saw what was coming in 2000. The stock market topped out. Blackstone, been a private company for 25 years. One of the best, if not the best, private equity firm. They went public. Again, they sold company to the public. They cashed out. The partners cashed out. When they go on IPO, the partners cash out. They still hold on to some of the shares, but they cash out, just like Mr. Nadella did, just like the Microsoft CEO did. They did this 2007, the summer of 2007, two months later, or 3 or 4 months later, the stock market topped out because they saw how ridiculous that bubble had become. In 2011, Glencore, the biggest equity, one of the biggest commodities traders in the world, they saw that their market had become too frothy. They went public, even though they've been private for well over 20 years. And again, so not all IPOs are negative, but that happened in 2011, March of 2011, May of 2011, an 8-year bear market started. They saw it coming. They saw that their market was getting too frothy. None of these things there was smart moves. They weren't the ones. They didn't come out and say, hey, announce some fake, make some fake announcements to jack their price up so they could sell. The market took it up that way, and they saw that it was gotten way ahead of itself, and they sold. That's what told me that this Microsoft, and of course Microsoft being such a big bellwether for the entire stock market, that was a big warning signal for me. Now, of course, some of those were IPOs. His is not an IPO because the company's already public. But what happened with Microsoft? Well, Microsoft's IPO was not a top. No, but the insiders didn't sell. It was only the venture capital guys. It was the backers. Bill Gates only sold $1 million worth of stock on the IPO. And he said publicly, if I could, I'd be buying on this IPO, not selling. And he joked he was still still working out of his mother's garage. He needed $1 million to go on vacation, whatever. But the point is that he did not sell. It was the venture capital guys, his early investors who said, we want to cash out. So he said, okay. And he did. He sold a tiny amount of stock, held on to the rest of it, and held on it for many, many decades. He's been peeling out of it ever since, but on a regular basis. It's a record. I mean, it happens. It's a very regular thing. It's not, when you own tens of billions of dollars of stock, one stock, of course you want to diversify. So, so my point is, just because a company goes public, sometimes they just want to go public because they need more money, because they want to expand. I mean, when a company goes public after just a few years, that makes sense. When a company's been private and very profitable that way for decades, and they finally decide to go public, tells me something. The insiders are selling. Why are they selling? And that's what happened. And Sam Zell, it wasn't an IPO. He just sold his whole company, right? Sam Zell, one of the greatest real estate investors of all time, sold his company in a private transaction right at the top of the real estate market 15 years ago, or 15 or so years ago. So that's again, these are the things that my experience has helped me with. And this helped me with this one in Microsoft. And again, people thought I was a little crazy. And I'm I'm not saying anything negative about him, about Mr. Nadella, about the company, about the company's prospects. They're all fabulous. But sometimes the stock gets too far ahead of itself. Just look at what happens, how many times Tesla is corrected. Look at Amazon. It's had 24 corrections of anywhere from 20 to 60% in just the last year. The last decade, okay? And they changed the world over the last 25 years. But stocks sometimes get way ahead of themselves because people get so excited about the way they're changing the world that they get way ahead of themselves and they have to come down. And in some cases, they have to come down many times. Apple Computer last year, okay? Apple Computer last year. Remember last year? Last year was a great year for the stock market. It went straight up all year long, right? We all remember that. Let me move this out of the way. It went up all year. We only had one correction of 5%, and that lasted for about 3 days, about a day, okay? And yet the stock market went straight up in a nice straight line, and yet look at how many corrections we saw in Apple. Okay, even though they had a great year, boom, 18% correction. This is one of the best stocks last year. 18% correction, 8% correction, bang, 11% correction. And then at the end of the year into early this year, this is before the markets really started rolling over. Okay, these are all, well, I guess it did start there, but see, big corrections. Stocks can do that. And that's why, even companies that, this stock had, was, as we all know, one of the best stocks in the market last year. And yet, let's just see, it's total, from March to the end of the year, say the stock went up 56%. What a great year. And yet it still had 3 very, very deep pullbacks, one almost bear market territory. So again, we're looking for these opportunities constantly. And people get too caught up in fundamental themes, really get burned because they don't realize that, that's great. For those of us, the small minority who do look at these things, and we turn on CNBC and we see that the guy's saying, well, yeah, Apple's down 11%, but I still like it long term. And that's the right thing. That's that analyst, he's thinking 3 years out. He's thinking 5 years out. That's what he should be doing. And that's fine. So I'm not trying to, beat them up too much. I just think they're too bullish. Again, they're paid to be bullish, so they are. I mean, when I say they're paid to be bullish, it's like something like 3% or 5% of all recommendations on Wall Street are sell recommendations. I mean, what does that tell you? You're trying to tell me that 90%, that hasn't worked out too well with a 26% correction in the S&P, and sorry, in the Nasdaq, and an 18% correction in the S&P, which is now about 16%. But these are the types of things that we want to be looking at, and my experience has helped me get that, and I think it really can help you, and it's helped us make some really good trades this year, and we hope we we'll continue to do that in the weeks to come, including next week. Looking for that right now. I'm looking for what might be around. We'll look at it again in the morning. We'll be talking about it in the chat room right away. But these things don't come up every day, every year. These opportunities, this is an unbelievable opportunity. Fortunes are made, and I'm afraid to say that because I want to tell people I'm going to make you a millionaire by trading these things. But you can make some really, really good money in volatile times like this with those who keep their head rather than the other ones who just sit there and say, "Oh, I'm going to ride it out." Well, that's fine, and there's nothing wrong with that because the market does go up over time, and you should not panic out of things. But I do think people should raise cash if this bounce that started on Friday continues. But my point is, for those who have the inclination and have the ability to be a little bit more active in their trading, can just absolutely kill it. So many people think that the only time you can do that is when the market's rallying in a big way, like it did the meme stocks last year, or like it did in 1998, 1999 during that great bull market. Now we have the tools where we can make it in both directions, and we can actually trade these volatile markets. Something, again, I said earlier, it's something that the institutions were the only ones that could do it in the old days. Now we can all do it. The problem is most people don't take advantage of it. We do in the chat room, and it's working real well. So, for those who are new to it, we're going to definitely do some more in these Tuesday morning calls, talk a little bit more about some real basics, but it's just an opportunity of a lifetime. It doesn't come on. I think it's going to last all year, and it could last into next year. So let's jump on it. Let's take advantage of it while we can. And I think it's really going to work. And then after that, we get to once the things settle down, then it's going to be an even better time to invest and trade. But trading has always been easier on to when the market's rallying. It's say easier is the wrong word because it's a hard thing to trade, but it's going to be a lot more profitable. It can be a lot more profitable when it's moving down than it has ever been in history, because the tools are there, because we have weekly options, because we have index options that expire 3 times a day, because we have inverse ETFs, because we have leveraged ETFs. All those things are possible. Very liquid instruments. and something that we didn't have in 2009, something we didn't have in 2008 or 2000, 2002, didn't have during the 1987 crash. We have them today, and we can use them. We do use them very aggressively, or very aggressively, and quite often when the when the markets see the moves, and that's what we're taking advantage of now. And we're going to continue to do so. We're just coming upon 6 o'clock, so we'll see what happens there. But one of the things we'll do, I'm going to ask some questions. But as we go through here, we'll look at some stocks that could be popping this week. And again, Apple's bounce back a little bit. It'll bounce back more, and we'll look to buy options in that one. But again, the most beaten up stocks like the Netflixes, like the Pelotons, some of these other, Akamai was another one. The problem, too bad about Akamai is it just the options are not that liquid. That's one I really like. But again, you look at these ones that have been really beaten up on a short-term basis for traders. That's where you're going to make the more money, because they're going to bounce back. Because they're down 70%, they can bounce 20%. And Apple, which is down 25%, is probably not going to bounce 20%. So you can, if a stock bounces 20%, their options are going to bounce a lot more. One thing I do want to talk about before we get too much further is the VIX. The VIX that a lot of people have heard about, and my 92-year-old father, he asked me about once a year. He's what does this thing mean again? He's as sharp as he's ever been, to be honest with you. But his background was in business, but not in the stock market or not in the markets. Although he's been a successful investor from basically all his life. But this whole complicated situation with the VIX, and what the VIX really is, they call it the fear gauge. And when it gets high, that means it measures how much people are willing to pay for put options versus call options. If they're willing to pay a lot more for put options, that means there's a lot of fear in the market, and the VIX goes up. So it goes the opposite way of the market. If it's going up, that means the market's going down. And if it goes down, that means the market's going up. And you can see the last 2 days, it's come down a little bit. But that's why I want to take advantage of it. When the VIX comes down, it makes it cheaper for you to buy any option, but especially put options. And so again, if that's why we'll be playing. I'm probably going to be playing to the bullish side of things as we go into early this week, and then looking for opportunities. We can actually buy and have bought and made some nice profits in VIX options themselves. But it's good to keep an eye on that, because when the VIX gets really high, it's in the mid 30s. It's funny. Jeff Gundlach says whenever it gets to 35, you should sell. You should sell bearish bets. You should become more bullish. Obviously, that has worked very, very well. Look, I got the 35. Got 35 for 2 days there, 1 day there, 2 days there, 1 day, a couple days, and it comes back down. But be aware, it's important to know where the VIX is, because if it's higher, it's going to cost you more to buy either a put or a call. And if the op moves down, it becomes a little bit cheaper. So therefore, you got to be a little bit more careful when the VIX is high. Hopefully, we'll see a nice dip back into the mid to low 20s next week if the market can see some upside follow through. Okay, let's see if we're at 6:02. Let's see if the futures have opened. Well, they have, but bang. And the futures are pretty. You can see where the Dow futures are up 400. The S&P futures are only up 2. That's not a big deal. And the NASDAQ futures are up a little bit. You can see just small gains in the NASDAQ and S&P. But 1 point, I don't know there must be a Dow stock. Something in the Dow Jones Industrial Average must have some good news in it. But it does look like things are stabilized, which I kind of anticipated, because we saw the cryptos traded in a fairly stable manner most of the day today. So I'm going to be looking for things on the buy side this week with a very short-term time frame, and with the thought that we will put some more bearish trades on later in the week or the following week. We'll just have to see how things trade. Rodrigo, if you're there, you want to...
And did you want to go over a couple other things here, or what did you?
There we go. Well, I just think that if some people have some questions, overall questions, or broad questions on the macro situation that we're facing in the marketplace, we're more than happy to talk about that. Or we can look at indexes, look at some of the technical situation with the indexes, and certainly we'll be more than happy to answer questions on individual stocks. As we're speaking, you see the futures are starting. Look at this line right here, net change. They're starting to rally a little bit more. These are not huge rallies, but although the Dow is rallying strongly. It does look like we could have a nice follow-through rally. But again, anybody wants to feed some questions into Rodrigo, I'd be more than happy to answer them, or certain tickers that you'd like to look at. We can look at the charts on those. It's just, go ahead.
Yeah. So while everybody gets a couple tickers there in the chat, so we could go over there. Maybe we could take a look a little bit there at because I do know there are some stocks, right? Some stocks maybe that might. Some people say there are some stocks that might not come back, Matt, right? From the tech correction, if you will, right? What is one stock? Just give us one stock that maybe you are.
I don't really have one stock because I don't want to predict the demise of a company. That just gets a little dicey. But
yeah, just one stock you like and one stock you don't like.
Yeah, I mean, well, again, this. Well, let's see here. I just want to look at the. Let's see. I want to look at on the. I talked about Devon Energy, which I really like, but in the technology sector, we want to look at Akamai. Okay, look how oversold this stock has become. It doesn't have options in it, but see how oversold this stock can become. Okay, see, and then let's look at it on a weekly basis. See how every time it's gotten down to okay, I'm going back. I don't want to go back. Let's zoom in. I don't want to go back too far because it's just hard for you guys to see. But here, look at this stock. It's down to its 200-week moving average. And I got down to it there back in 2019, and very, very. This should be fine. So you can see. I'm going to get rid of a couple more lines here because it's not quite such a busy chart. But here, see, yeah, I got it oversold here. That was a nice low for the stock. Got oversold there. That was a nice low for the stock. Same level. It didn't quite. Each case didn't quite get down to the green line, but very close. And now it's bouncing off that 200-week moving average. I think this is a great stock on an intermediate term basis for people to look at. So I really like that one. The one that I'm, there's one, first of all, Peloton, I like it on a short term basis. I think they're going to have to be bought out. And the other one, because I don't want to get too negative on it, I just think it's going to have to be, Robinhood, they're going to have to be bought out. They're not. I don't want to be necessarily shorting the stock or buying puts in it because, I think what they did was amazing. And the reason why I don't want to short it is that somebody will buy them out. My concern is that they probably won't get bought out until it's got much lower. And when people were telling me when the stock was, dropped to 20, and they said, "Oh, this is going to be bought out," and I'm like, "Yeah, they might, but nobody's going to. Why would anybody buy them out now? But when they're flat, when their prospects are not good, and their prospects that we will get back to what we saw when the meme stocks were trading high are not going to happen anytime soon. This stock is not going to come back like that. People are just going to wait, and they're going to pick at the carcage of this thing. And I just think, again, I don't think they're going to go out of business, but this is, you want to buy it for a takeover, that's fine. I think I'd maybe cut in half before that happens, I guess is my concern.
All right. Okay. All right. And we got a couple tickers here ready to go. So let's go ahead with the first one here. I think, you already did cover Tesla, but
someone's really talked about it as much as we usually do.
Someone's asking about Twitter, but I was going to say you can't talk about one without the other. So
right.
Yeah.
Well, Twitter, it's, this is, obviously it's hard to use. There's not much to really talk about in terms of the technical aspect because we know that this is going to trade on the takeover chatter, and what Musk is doing. It seems fairly obvious to me. I'm not a Twitter analyst, but it seems obvious to me he's looking for looking for a lower price, and he will either get the lower price or he will take the $1 billion and move on because he can't. The price he initially did, I don't know what he was thinking. He can't make money off it. And he said, I don't care if I make money off it. Well, he's got to at least break even. And what he's doing right now is trying to find a way to get this thing done at a lower price to make it more reasonable for him and his investors. And if he completely walks away, the stock is going to get crushed. The price is completely dependent on the takeover because and he's trying to get it. He's trying to jawbone the thing lower. You know, I'm staying away from this one. It's just not worth trading. It's just too many chances. You know, this thing could be at $45 by midday tomorrow. It could be at $35 by midday tomorrow. I have no idea. We'd just be guessing. And Elon Musk is a brilliant player, long term. I mean, I'd rather buy Twitter after he's bought it than I would try and turn maybe turn it around. I'm just staying away from it. I'm sorry. You know, you can look at it here. I'll tell you one thing for sure. It gets back up to its 200-day moving average. I'm going to get out of it. That's that purple line there. But you know, for those who want to play that guessing game with Elon Musk, that's great. I got better things to do with my money where I'm not guessing on what one man is going to do. And I'm not trying to put him down. I mean, he's brilliant. But it's just you're depending too much on that. Now Tesla, on the other hand, is that stock. Yeah, it's bouncing around on the Tesla takeover, but that's not its long-term prospects. And you know, we try to make this double bottom here. This stock should see a nice further rally this week. Now, you know, whoops, here's oil. Look at the oil back up. That's good. And I know that doesn't sound like it's that good, but it actually is because it helps the energy stocks rally. And so, but the see this could be viewed as a double bottom. Let's get rid of these charts. Get rid of these things. See how oversold the stock had become? Double bottom at 700, or just, you know, again, just because it got a little below 700, that's still a double bottom. This thing should break nicely to the upside. So we're going to be looking to play Tesla on the bullish side next week. Twitter, I'm just going to stay away from it. It's just too much of a guessing game,
Right.
And depending on what one person might tweet at a certain time.
Right. Interesting take there. And we got the next one here. Google. I think we covered it a couple of weeks ago as well, but
We'll talk about it real quick. But I mean, here's another one that's gotten beaten up. Great company. Great company. Great long-term prospects. Now, see again, oversold, trying to bounce 2,200. Let's go back a little bit. Yeah, I should go back further. Sorry. See, you know, the thing is, it has broken below its its trend line. You know, if you drew its trend lines well below that, it's made a key lower low. The key breakdown for there was, see how the I'm gonna zoom it in for you so it's a little bit easier for you to see. Boom. I'm gonna get rid of all these moving averages so they don't complicate but see how important this. Whoops, I went back too far. Zoom it out just a little bit further again. Okay, but see how important this support level was. Put it here. So, boom. Okay, now. Okay, so that was basically 2,500, right? 2,500. Look at that. 2,500. Got down to it there, almost there. When it finally broke it, it got hit. Old support becomes new resistance. It got close to it, right? This stock, I think, next week will be good on the buy side. You know, its options are expensive because it's a $2,300 stock. But what we're going to be looking, I don't know that it'll make it all the way back up to there, but that'll be the key. If it can break back above that level, that 2,500 level, it's going to run. I think it's going to get up near that level, just like it did here, and then this rally will probably fade. However, if this bounce in the market is as strong as the one was in March, it could actually get a but my bet is that when it gets back up to that 2,500 level, what I'm going to do is I'm going to be adding negative bets to buy, or probably looking at, again, they're expensive, so I don't know if I'll do the trade, but I'll be making negative comments about the stock with a tight stop. So in other words, I would want to make a bet that the stock will go down, but knowing that if I'm wrong, I'm going to get out of it really quickly if it breaks above 2,500, because that is that key resistance level. So keep an eye on that level. I am personally right now, and again, if it happens 2 weeks from now, I might change my mind, but of course I'll talk about that in the chat room. But right now I'm thinking, yeah, 2,500 will probably be its upside. Short to intermediate term. Okay. Mm-hmm. Longer term, I love the stock. You have that in your account, keeping the account. If it comes back down again, you're going to add to it for that in that long-term bucket. The short-term trading thing, we're going to be looking though to make another negative bet.
Right. Important to note, guys, right? Matt is referring to the short-term bucket and long-term bucket because he does short-term options trade, short-term swings, but also if you ask him for a long-term hold, right, you do get that sort of question answered and such, right? So
Absolutely.
it interesting there. All right, then we got interesting stock there, and then we got Amazon from Shirlene Charlois, and we have covered. It's funny, we covered Amazon, we covered Google several weeks ago, Matt, and we pretty much kind of it's just been looking a certain way, right, for these kind of companies,
Yeah, it really.
consumer.
And the thing is now, the one great thing about Amazon is that for this stock, again, it's an expensive stock, so it's hard to trade the options. Again, talk about some certain basics that we talk about. When you buy a call, you expect you're making a bullish bet on that asset. You think it's going to go up. If you buy a put, you think it's going to go down. That's what you're betting. It's going to go down. The thing though is that when you buy one, there's another basic for it. If you spend $1 to buy $1 to buy the option, it's going to cost you $100 to buy that option. Okay, it's trading at 1, but you always want to add those 2 zeros. Okay, if you're trading it at 80 cents, you buy it at 80 cents, it's going to cost you $80. Okay, but these options, because it's such a high price stock, look how expensive these options are. Oops, well, there it goes. See, these are 30. It costs you, a lot of money to buy just one option. These stocks are trading at $32. That's expensive, okay? You're paying hundreds of dollars just to buy one option. But Amazon is about to split. It's going to split on June 3rd. So Amazon is going to be one that will be much more, believe me, you always want to talk about it because it's such important stock to the market, such an important company to the economy. But after June 3rd, we're going to be more aggressive in trading the stock because when the stock splits, those options become much more affordable, and we'll be playing. But again, I just wanted to go over kind of that basic thing. But here we do remember how this stock, even though they changed the world, the stock has been dead money for over a year now. Look how that stock has done nothing. Okay, it got stuck in that sideways range, boom, 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 sideways range all the way long way. Finally broke below it and got absolutely crushed. But look how oversold it is. Okay, it got oversold in March, and look how much it rallied there. Okay, again, that may not look that much in that chart, but when I look at it, boom, let's chart it, boom, boom. That's a 21% 20% rally in that stock. If we could get a very sharp rally in this stock next week, it's too bad it's not June 3rd. But again, this stock looks like it's going to do well. You could see a very nice strong rally here if the market holds up, which I think it will, on a short-term basis. So this is one. If you have the money to go ahead and buy those options, that's fine. But it's not one that I've been playing with because it's just so expensive. But let's look at also the weekly RSI on this chart. Tells you how oversold it is. Boom, boom. And let's go here, 2001. We're going to go all the way back to the great financial crisis. And look at this. It's the most oversold it has been since then. Okay? Most oversold. This is the weekly RSI chart. And, oops, I wanted to go back to 2007. Let's see if I can do that. There you go. See that? It's even more oversold than it was, or basically just as oversold as it was at the lows of the great financial crisis. Okay? Maybe slightly more oversold. So, you know something? People ought to be looking to buy this stock. I know I'm going to have to write that one down. I didn't realize that it got quite that oversold. We'll be talking about that one as a pick. It was funny because I picked it on an intermediate term basis, and I think now this is one. If you want to move back into this one on your long-term bucket, this is probably a good place to buy it. It should be a nice trade for next week, and then we'll look at it later. Once we re-engage on the market. But this is really oversold on an intermediate term basis.
Right, and keep in mind, guys, Matt is going to be following up with all these trades and these option trades that we're going to be making. But even for stocks or that as well. And someone here is asking about. Okay, so we already talked about this one a little bit earlier, VRM. We talked about it from the overall used car market. I don't, did we cover it from the trading perspective, Mark,
I just
Matt?
said, I'll pull it back up, but that 50, hold on a second.
Because I did notice there, and I didn't know it was that much, but you know, the short interest on your Bloomberg terminal is pretty accurate, right? This is a tool for equity firms and things like that. So,
Oh, yeah. Oh, yeah.
this is what equity firms and trading firms use, guys, right? So,
Short interest, SIN. See how that short interest is? I mean, it's an all-time. Of course, the stock. It's not like the stock's been. I mean, so see, look how high that short interest is. You know, if this thing gets where's the stock? I mean, well, we'll see where it's trading tomorrow morning. But this one is could be very interesting because if I'm one of those guys who's in those, I mean, the kind of chat rooms I don't really like because they got tens of thousands of people in them and a lot of people just trying to pump and dump. But boy, with that kind of size short interest with the stock trading as low as it is, this could be a really good candidate for a squeeze next week.
okay, good. So that's your answer there, Robert. Good question there. Next one here that we have is, let's go ahead and pick this up. Starbucks, SBUX.
Now, of course, the fundamental aspect of it is that we got the new CEO came back in, the old CEO came back, and after he ran for president for like a day and a half, he's done an unbelievable job, obviously over the years, and it just gives people the kind of confidence that will be helpful. And the other thing I will say is that I used to think that I'm not a coffee drinker, but everybody I know is, and so I thought they charge so much, people are just going to give up. And when things turn down, they're going to. Well, they didn't turn down. They didn't. They kept going to Starbucks during the financial crisis. They kept going to Starbucks when they could during the pandemic. It's hard to fight this company. But again, stock coming off an oversold level. This looks like one, again, it had a big bounce on Friday. That's the one thing I worry about. But it's bounced so much that how much more can it really bounce on a near-term basis? Again, look how oversold it is on its weekly RSI chart. Having said that, I do think that this stock, they still have some changes to do. The CEO came in as technically as its interim CEO. I think see how it got up to its 50-day moving average and failed. 50-day moving average and failed. This stock gets back up to its 50-day moving average again. I'm going to be looking to make a bearish bet because I think that will probably coincide with another topping or another rolling over of the broad market. But can it get to between 8 can it get to 80 between now and then? On a percentage basis, that's a nice move, and then the call options, it could even be better. So but the stock, it seems pretty washed out right now and looks constructive for long-term players. It's okay to buy it in here, just like it is with Amazon. Not as compelling as Amazon, and I do think you're going to get if you want to nibble a little bit here, that's fine, and just kind of tuck it away. But I think you'll be able to back up the truck and get more aggressive at a lower level later this year.
Right, good stuff there. And let's see what's this other one there. We already covered that one.
I can barely hear you. Are you?
Oh, yeah. Sorry about that. And then we have interesting. So we got Baba here. Interesting because, yeah, I mean, again, the Chinese stocks there, Matt's all over it too.
We talk about this all the time. Now, again, this is one that's everybody kind of focuses on the 50-day. I like to look at the 100-day more. Now, again, here's a stock. This is a stock. You guys are giving me great ideas. I appreciate this. And we will talk about some of these names because look at Alibaba. Look how oversold it was. Now, again, it got deeply oversold there, But it didn't, you say, well, okay, it saw a little bit of a bounce. It got up to its 50-day moving average. That's okay. But do I really want to, that's really not enough of a bounce for me to really get excited about, is it? Well, look at that bounce. That's a 23% bounce. And you buy the options. If a stock goes up 23%, its options go up hundreds of percent. Okay. And so I'm looking right now that, and I just want to take that away so just you can see it. I'm going to get, now I just want to point out that let's get rid of these things. And this is what people are asking me about all the time. Let's get rid of, whoops. What happened there? Oh, I see what I did. Okay, hold on. Okay, see, I'm going to get rid of the 200 days. So now we've got the green line is the 100-day moving average, and the 50-day is the yellow line. So it got up to the yellow. So I think at least we're going to get to 98 and a half. Again, but it could get, and maybe probably will get, see, the more important line is the 100-day moving average. That's the green line. I'm going to take that away because most times it did break above that 50-day and got to its 100-day. However, I think they still have the clamp down in China. I think China's got their clamp down on certain companies, and of course they have the lockdown in their economy. It's supposed to open back up by the end of the month, but even we'll see how that works. But look how incredibly solid resistance that is. So if it gets to 100 well, again, this is a declining line, so it will drop line. Right now that line's at 109.50, 109.40. By the time it gets up there, it'll probably be about 109. I will be looking to make a bearish bet. So right now, be looking bullish bets this week and looking to turn around and flip that at some point later this month or sometime in June for another decline because that 100-day moving average. Now, if we break meaningfully above it, then I'll cover that short and look for a nice move higher. But right now, because of my overall macro look at the world, I think this thing, the best it can do, get back to that 100-day moving average. But look at it, I mean, it just doesn't even get even a fraction above it and rolls back over. But that's going to be one. So keep an eye on that. We get to the 100-day moving average on Alibaba. It's going to be another great play to buy some put options and look for a rather sharp decline because each time it does roll over, it gets hit pretty darn hard.
Right. And we have here, this is an interesting one because you've actually done pretty well on this one, NVIDIA.
Oh yeah, NVIDIA. This is one, again, people bought this on Friday in the chat room and did well. And I mean, I chose Apple and, other people said, what about NVIDIA? I said, sure, you want to do that one? That's fine too. NVIDIA is more beaten up than Apple. So it's, the reason why I chose Apple Friday over NVIDIA was because I could see, or at least I could tell, it seemed to me like Apple was being used as a source of cash for those crypto sellers and margin calls in the crypto area. But now, I mean, look at this. See, it's been beaten up so badly. It's a great company with great long-term prospects. You see how oversold it is, but look at its weekly RSI chart. Okay, see how over it gets. It's not quite down there, but it's very close to an oversold level. And you have to go back to 1.5. See that? 2018 is the only time it got more oversold. So it may only be a short-term bounce, but I want to look at you, show you something else here. Why I like NVIDIA on a short-term basis. See that? Look at that. See the MACD chart. Remember we talked about that when the 9-day moving average crosses above the 12-day. You have to be careful of head fakes. See here, it didn't quite make it. It looked like it was going to be a positive cross, and it never took place. But when it did, it finally took place in the middle of March. Look how strongly that thing rallied. Again, I'm going to get rid of these moving averages on here because it just clutters up the thing. Now look at that. We had a positive cross right in here, right? Stock rallied 36%. We saw a positive cross right here. It wasn't at the right exact bottom. It was a little above the exact bottom, but boom, stock rallied 26%. Now here, didn't quite happen. Sure enough, so you have to be careful, okay? But look at this one. Every single time we've seen a positive cross, this stock is seeing a huge rally, 57% when that cross took place. I'll go back to here. Okay, back in August of last year when the market was still doing great, positive cross, great, just 20%, okay? Here, what happened here? Didn't quite make it, so we didn't jump on board. It's just about to make it now. I'm gonna zoom in so we can see it a little bit better. See how it's getting close. But it got close back there and didn't work, so I'm not ready to jump. I'm not ready to jump on board yet. But once it becomes more pronounced, okay, we're going to jump and looking for a nice rally in NVIDIA. And this is one we talked about in the chat room last week, not as much as we did with Apple because of that source of cash situation. But NVIDIA looks really good on a short-term basis. Longer term, I still think Tex has to reprice itself. It's okay to buy. I think it's absolutely okay to add to this or buy it, nibble on it. If you don't own it at all, nibble on it a little bit here on your in your long-term bucket. But I think that you'll get a better opportunity to really back up the truck later this year when the broad market gets more fleshed out. But see how important these MACD crosses are on this particular stock. It's so important. We get a positive MACD in this cross, we want to own this stock on a short-term basis. We want to own the calls in this stock.
All right, and then we have a Ford here from Tom.
Ford Motor. Oh, it's just been. It was funny because I really, even though I think they're doing a lot of good things, I really wanted to short, and we did short the stock, and we made a little bit of money, but I was too early, and I say short. We didn't short the stock. We bought puts in it, but this was back in here. I did. We bought call and puts in here, but it took a while for it to find, and it finally fell. But again, look how oversold the stock got. Nice bounce yesterday. This is going to be one again. If this market can hold up next week, and we'll see how we'll look at it again in the morning. But see how oversold it got. Again, it's that this is Ford Motor Company. This is this looks like Ford Motor is never going to get wildly oversold like Tesla can get oversold once in a while. So and again, let's go look at the MACD chart. MACD, MACD. Again, look at all these fakes. It's like it's just going lower, lower, lower. But when it sees a positive MACD chart, look what it does. Boom, takes off there. Positive MACD cross there. Stock took off. So if we, and it's here, the stock, again, this may not look like a huge move, but right here we had a positive MACD cross. And that is a very nice percentage gain, and it's getting close there. So again, we're looking at these MACD cross, but see the MACD cross? Man, doesn't look like a lot, but that's 14%. You're making 14% in the stock. Those options are going up over 100%. So it's head fake, head fake, head fake. This one can be the real deal, a real positive cross. We'll be looking at it. If you like it on a long-term basis, they're making a lot of really good moves. And plus, it's retesting the lows from back in August and September. This again, it's a good spot to enter and for that long-term bucket. Just add a little bit here. Again, longer term. I'm sorry, to really back up the truck. I'm not advising backing up the truck on any stock right now. So, but this is a good company. They're making the move into EV very, very well. And boy, if they get their pickup truck. Electric vehicle pickup truck that's successful and with a long duration. Oh my gosh, everybody loves their pickup trucks as it is. It will explode, and they seem to be the one who's moving in that direction better than the others.
Right, interesting take there. Well, I mean, I think that kind of covers most of the stocks here we had, Matt. Is there anything in particular you do want to add here? Because I do know that tomorrow is going to be. I mean, tomorrow's going to be an intense day in the chat room because you're going to be live trading, adjusting the portfolio. What are a couple of things you'll be looking forward to? And of course, every stock that we've been talking about that there could be a trade idea to come up. Matt will follow up in the chat room with all the members, entries, exits, as we showed you earlier. But what are some things that you'll be looking to next week, Matt?
Well, next week we're going to be looking. Well, right now we're going to be looking at seeing if we get that upside follow through, because what we saw in March, and I'm not going to get too into it, but it's called positive gamma. When all these options traders get caught on the wrong side of the market, and they got caught because they had too many bearish bets on, and they got squeezed. It was actually a squeeze in the options market. The same thing could happen this time around, and so we want to, especially those stocks that are really beaten down. We're going to take advantage of that in the stocks like a Netflix and Nvidia, and we're in those. However, as we move through the week and into the following week, we're going to be looking to set up bearish trades yet again. We are in a completely changed environment. The Federal Reserve has changed everything, but more importantly, we are in an inflation environment that means the Fed cannot pivot to the degree they would like to do, and they've done in the past. So for the Fed to come and save the day, unless the system is really breaking down, the Fed's not going to turn. Okay, they're not going to pivot. And if they do that, it will be after the stock market's fallen 25, the S&P has fallen 25% or more before things really break down. Then they'll pivot. We'll take advantage of that as well. But we are going to see several waves before that happens. It's just same thing we had in 2000 to 2003. 2007, 2009, we had huge rallies along the way. We want to be able to take advantage of those. But we have the tools to use them. The rest of this year is going to be volatile. We're going to see more of what we saw last week with forced selling and liquidations. And it's the most exciting time for individual traders. It's the most exciting time in history because we have the tools to use it. For hedge funds and big money hedge funds, they've had several exciting times where they've really been able to make a lot of money when everybody else was losing their heads, that they kept theirs. As the saying goes, if you can keep your head while others around you are losing theirs, you can really come out ahead. They were able to do that during when the bubble burst in 2000. They were able to do that during the crash of the great financial crisis. They were able to do that during the when the pandemic really hit. But now, because the individuals didn't have those tools, now we have those tools. So therefore, it's an exciting time for them, but it's one of several that have taken place in the last couple of decades. This is the first real opportunity we've had, and as individuals, to trade this way. And I think it's going to continue for the rest of this year. It should go into next year, and then therefore, when the dust finally settles, not only will we have not just weathered the storm, we will have made money in the storm, and we'll have the money as the market starts to rally. We'll be, instead of people saying who panicked and sold at the bottom and then sold more because the market's bounced, I can finally sell some more. Those are what people did in 2002 and 2003 and 2004, and people did in 2011 or 2010 and 2011. They were selling on strength because they were still scared because they'd lost so much money. We'll be confident. We'll know that the dust has settled. We'll be buying on the way back up because we had the profits from this selling. I can't tell you how excited I am about this opportunity to take advantage of this volatility, that at a time when we've never been able to do this. We have the tools to do it. I keep saying that the world tools, but they're there. I hope you'll join us in the chat room. It's worked out really, really well so far. I think it will continue to do so. Good luck with everything. But this coming week is going to be another. It's funny. Every time I talk about something like this, I say next week's going to be a way. They go, well, Matt, you say that every week. Well, every week I'm right. At least this year it's been that way. And it's going to be another year, but it's going to be nimble. We're going to stay nimble because we could see another one of those rallies that we saw in March. We want to take advantage of it. And then after that, we'll let it run. Thanks so much, Rodrigo. Thank you all. Good luck going forward. But I really, really honestly believe this is an opportunity of a lifetime for people who like to trade actively because we have those tools to use. Those tools will remain with us and we'll continue to be able to do it for years. But you gotta strike when the iron's hot, and that's what we're doing right now. We've been doing it all year. We're going to continue to do it going forward. So I hope you'll join us. Thanks a lot, Rodrigo. We'll talk to you soon, and good luck to everybody in the weeks ahead.
All right, there we go. Matt Maley, Chief Market Strategist. There you go. Thanks a lot, Matt.
Thanks, buddy. We'll talk to you soon.
All right, I will see you in the chat room Monday. First thing, that is what I will do the first thing on Monday, guys. Every time there's volatility in the markets. And it's really hard to figure it out because, many times on the major news places, you just, you know what's up, right? So I go into Matt's chat room and really that's where I get the whole deal, right? No sprinkles, right? Just really what's happening. And that's really why I do enjoy Matt. And I have been trading Matt's stuff here for about a year. So, all right. So if you do have any questions, guys, post them in the chat. I'm just going to be here for some short time if you do have a question. But most importantly, I do want to show you the chat room for those that did join here. So really quick, this is how the chat room will look like generally, right? You'll come in here, you'll see the main chat. You'll have this chart next to it and this proprietary scanner next to it as well. It'll be open Monday to Friday, right? Here on the right side. And basically the chat room works. Once you click here, open chat in new window, that's what I do typically. It's just going to open as one window itself, right? So you have two channels here. The inner circle chat where everybody's posting research, trade ideas, things that they're looking at in the market, like, hey, Matt, what do you think about this? Things like that. As Matt told you, he made really, really well this past week with Matt with the TQQQ calls, right? So you can see here, Tiff cashed out TQQQ already. So it's good to see that, even during volatile markets, right? You at least see that there's a light in the tunnel. For some of you guys that you've been trading for months and just been losing money, and you can't, maybe you're still trying to find that bounce that you hear about everywhere, right? Is this the bottom? Is this the bottom? Like, instead of trying to do that, you trade with the community, helping each other out, and with the guidance of Matt, it's just a lot easier. So if you're doing it alone, that's wrong. Do it with a community that makes sense, right, for you. So everybody, as you can see, is posting here what's going on with them. Matt will be posting here as well. So it's not just the members. Matt Maley is also posting here, answering questions and things like that. Now, the other place where Matt will post here, this is where only Matt can post, right? In Matt's important messages in this channel. And you can see entries, exits, all sorts of stuff, the exact contract. Remember that Matt told you about that TQQQ trade that made like 70 or 100%. I mean, you can see the entry right there on the May 13 calls. For those of you guys that were here when we showed you the actual, entry, exit, and everything right there. So this is where Matt posts entries, exits, market updates, things like that. It's as simple as buying a call and buying a put. If you are new to options, I mean, I don't know what you got into options for, but if you are trying to trade options for the volatility to make as much as you can, to use leverage to your advantage, right? And just buying calls and buying puts, that's what you need to do. It's the most simple type of trade, right? It's as easy as buying a stock or selling a stock, right? So you buy an option for a call and you buy an option for a put. So it cannot get much simpler, guys, right? So you get the exact contract, you get the exact expiration date, price, entry, exit, and more importantly, keep in mind, there's a lot of timestamp. This is why it's very important to me, because whenever you're talking about, all the volatility that's out there in the markets, entries, exits, when you get in, when you get out, you do want to know exactly when Matt posted, right? That. Now, if you're an active trade, you're buying these types of trades, you want to at least have this open. And I would suggest using these sound alerts that I showed you guys here. All you got to do is make sure the bells here on the left side are on. Have this chat room open. As simple as having your Gmail or whatever, Instagram, I don't know, whatever else you have open there. It's as simple as that. Having this open on your laptop. Okay, that's it. This window. You hear that pop? I've been hearing a couple pops here already. But not now. Most importantly, guys, I'll do this, right? I mean, again, I would join the community, of course, right? But let's say let's say at work and I'm really not able to communicate with everybody, just really want to get the trades for Matt, right? Just put the alerts on Matt's important messages, no worries, right? That way you get that pop only when it matters. Now, if you want to get, alerts from the other channel as well, where everybody's posting, including Matt, you can do that, right? That way you're a little bit more engaged. So that's really the best way that I can feel you guys can use it. And being here, talking to thousands of traders for years here at Benzinga, I can tell you that this is so helpful for everybody. Like, this is because this chat room started, I think it was September last year, around there. And there's things that's been added to it. This chat room is Benzinga's proprietary technology. It's our code. We didn't want to give you no Discord cheap chat, nothing like that. We wanted to give you something good that we can build on, and we can kind of, show you the community, because I cannot talk about this chat room without the community. It's just amazing, the people, how they help each other out. And that's really what I meant about trading with a group that really, you can see it, right? You can see how everybody helps each other out here, has a great time. And I know, I think 90% of these people, I signed them up. So everybody here, I can tell you, has a great passion for learning, a great passion for helping each other out. Jassy, very nice to check out Matt's experience. No worries. I mean, Matt is really a very, very talented individual. I don't know really anybody else with that curriculum, with that background, that has any sort of trading service. With 40 years in the markets, and also being a head trader, and also being a head chief market strategist. So a lot of the people you do see on CNBC really just focus on US equities. So Matt's pretty much above that. Let's see. So yeah, everybody there is kind of getting at it, right? So if anybody has a research, or maybe, hey, Matt, what do you think about this, or anything like that, you can do that. But yeah, that's the same thing, right? You pretty much use it whichever way you want, even though we're trading options there. you can ask Matt, for example, what's a good long-term hold or anything of that stuff, right? Now, Matt did buy some calls last week, right? And he did do very well on that. But keep in mind, even during a correction and a crash, there are going to be bounces. They just don't go down in a straight line. And you want to make money on both ways. That's really what this is all. That's what this is about. That's what Matt's chat room is about. Trading the volatility, and the volatility, it works both ways, and it works on all different asset categories, and you can profit on everything that's happening. So even if you might hear negative news on CPI numbers and anything else that might come across, right, as we continue to go along, you can always make money on the bounces. And even if it comes out as a good news, good piece of news, and things turn around, then you can still make money on the volatility on the way up. It's not like it's just on the way down. It's just what the market tells us to do. And Matt pretty much guides everybody there. Entries, exits. You don't have to be a 40-year Wall Street veteran like Matt. All you have to do is have this Windows tab open and do what he does when he does it there. You get the alerts. I mean, as close as you can get to it, really. But if you're in a live trade, if you have if you have an open position with calls or puts, I think you should keep a close eye on the chat room, right? I mean, I think that's really how you should do it, right? When you're trading volatility, right? Vol trading. So that's what Matt specializes in. So there's also the session, really quick, guys. It's on Tuesdays, 11:30 a.m. Eastern. Please do not miss it. Keep in mind, Matt's a very busy guy. He's on Bloomberg and CNBC. The fact that you have him on a live meeting just for the chat members, where you go back and forth and it's like, hey, Matt, what do you think about this and all that stuff? And you get his truly honest opinion there when he can speak 100% freely, right? You know, if you go on one of these big news organizations, you know, that you'll get questions and things like that. But if you are in a group with your trading members, it really, you know, that's our team, right? That's our community, right? We work together, and it becomes more personal. So instead of watching somebody on CNBC getting asked about, you know, Shopify or Apple, right? You know, you can ask him about specific types of short trade ideas and things that you have that you're not going to hear out on on these places, right? So that's really why I think it's important that you guys take full advantage of the person you have in front of you. Well, you know, who was here, Matt Maley, right? Besides, you also have him Monday to Friday, 9 to 5. Um, Realistically speaking, any retail trader should not have access to a chief market strategist at a firm. That's just not how this kind of stuff works, especially in a live trading chat room. Um, right? Keep in mind, it's not a junior associate that you're talking to. It's a chief market strategist, right? Top at the analyst side of the firm. So take advantage of it. Ask the questions, engage, participate. I can tell you a lot of people have done very well in the chat room. The returns always vary, but I mean, you know, you just need one of those good trades, right? A year. And that's all I need, honestly. But anybody has questions, yes, Red, he does pick short-term option trades. That's really where the numbers come from. That's why they're kind of big, because those are the trades that do give you that volatility. And if it doesn't work out, yeah, you cut out of the position and we're already hedging on the trade. So it's a way, it's how Matt's been trading. So 40 years of doing this really is really good to know, right? Especially for all those folks that really haven't even experienced a lot of the things that we are, right, seeing throughout the market. So I think we covered all the questions here, guys. If anybody does have any further questions about joining Matt's live trading room, where he breaks down how to trade the news, right? How to trade everything, that the earnings, the Fed announcements, all that sort of stuff. That's what he does here at every day, Monday to Friday, right? Yeah, he's on, you know, the news, and like if they interview him and stuff. But this is where the only place that you're going to get his entries and exits, the only place. So, all right, guys, great stuff. Thanks for being here. Want to give a big shout out here for you guys. And any other questions, reach out. The contact will be in the chat there on the YouTube and the Zoom. So stay safe. Have a great weekend, everybody. Make sure that you're, you know, if you're doing, you know, trading and all that stuff, trade with a plan. Don't just be guessing out there. And more importantly, trade with a good community, right? Give this a shot. 7-day money back guarantee. There's nothing to lose out there. I'm telling you, these markets are crazy. The best thing you can do is, you know, get with a group and tackle it together. It's way better than trying to figure this out on your own. From experience and from, hey, the thousands of traders that I've talked to, right? They all started thinking they were the one and they could wing it. I'll tell you, it's a very common feeling, but you know, the actual numbers, you know, if you would talk to the people that I've talked to on the phone, you'd understand what I'm saying. So that's my advice. Join a community of traders, right? That is helpful, helping you out and all that stuff. I'll tell you, you'll see the difference. If you don't, you get all your money back and that's it. You know, everybody moves on. But yeah, worth a shot in my opinion, especially in these markets. Thanks everybody. Have a great weekend. Stay safe and we'll see you guys Monday in the chat room.
get that money.